Start of the show, the tailwinds are in place on the macro side, but having the rally having done so far, could we see some pullbacks in the second half of today or for the rest of the week? Time will tell. For now, let's celebrate while we can and let's be happy while we can.
Yeah,
it's a good show.
Good point.
And I think the next thing that we need to watch out for is the RBI policy, which is on Wednesday, so that will be crucial as well.
Yeah, in terms of commentary. But before you get to Wednesday, up next is Ask Profit, so you can ask all of your questions there. Stay tuned, lots more coming up over the course of the day. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है श्रीनगर तक अलाउड। एक हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
You're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanshi Singh. First up, let's take a look at the top headlines. Bitcoin above 63,000 levels on regulatory optimism. Tokenized funds, central bank pilot and record equity volume signal shift. crypto ecosystem pushing for Senate vote for Clarity Act. And billionaire investor Ray Dalio says 1% of his portfolio is Bitcoin. And those were the top crypto headlines at this hour, but let's also delve into greater detail in terms of the price trends as well. Now, when you talk about Bitcoin, you're looking at it above those 63,000 levels, primarily driven by improved regulatory sentiment following recent SEC CFTC clarity as well coming in on classification of 16 major tokens as digital commodities, reducing that legal overhang when it comes to institutions. Now, even US Iran talks have resumed, aiding some relief also to some of the riskier assets. And meanwhile, you do have BNY Mellon's new blockchain transfer agency, a multi-central bank real value tokenization pilot, and July's $11.3 billion tokenized equity trading spike, all also pointing to accelerating tokenization as well, and that's across custody and markets. Let's move on and talk about the overall industry as a whole. Now, you do have the crypto ecosystem that is pressing Senate leaders to schedule a digital asset market Clarity Act vote, and that's before the August 7 to 8 recess window, while negotiators raise issues over ethics language and propose developer liability standards. And lastly, when you talk about Bitcoin, it's earned another vote of confidence coming in from billionaire investor Ray Dalio as well, saying that around 1% of his portfolio is allocated to Bitcoin, which he describes as hard money that cannot be printed and can help preserve purchasing power. And that said and done, before we wrap, here's a quick check on changes to crypto prices over the last 24 hours. Now, you do have prices rising, and that's across tokens, as you can see reflected on your screen. So Bitcoin, Ethereum, XRP, Solana. Meanwhile, the support resistant levels are at 63,000 and 65,000, at least when you talk about Bitcoin. Time now to take a look at the crypto strategy for the day. Here's what to keep in mind for the day now. In terms of the market outlook, it's slightly cautiously optimistic that you're looking at. Clarity Act, that's one very important trigger for technicals. When you talk about the Bitcoin resistance levels, like I said, the range is between $63,000 to $65,000. And you're also looking at positive macro cues that may hold risk on sentiment. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole. The team is available to provide guidance and help users make informed decisions. And that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome to NDTV Profit. You're watching Ask Profit. I'm Mahima Vachhajani, and with me as always is Puneet Zaveri, and this is a show of course that gets all your stock related queries answered. Viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing on a Friday. On Friday, we ended on a higher note, on a very resilient note, and today we're carrying forward that. 24,500 levels is what we're seeing on the Nifty 50, an uptick of 0.8% almost. At the day's high point. Let's try to pull up the heat map and see as to what are the counters that are doing well in trade today and contributing to those gains. You have ITC topping that chart, though the numbers were not good, but volumes have been resilient, and also there are brokerages that have gone ahead and hiked the target prices for this one. There's Shriram Finance, which is also doing fairly well. Interglobe Aviation up 2.5% as well. IT names back in action. You have Infosys, TCS doing fairly well. Tata Motors, Bajaj Finserv, yet another day of good gain coming in for this one. Eicher Motors, so auto names also continue to do well. But on the flip side, you have Sun Pharma, which is taking a knock of around 1.2%. Maruti Suzuki is also down by about 0.8%, and Bharti Airtel is also where we're seeing profit booking. But the bank Nifty is also today back in action above the 57,700 levels, up by about 0.8 odd percent. So it'll be interesting to watch out for as to when and at what point does this cross the 58,000 levels, because that is the levels that crucially a lot of traders are watching out for. In terms of the broad end of spectrum, outperforming the benchmarks because the mid cap 150 is up almost 1% at the day's high point, and so is the small cap 250 up by about 1.2 odd percent at the day's high point. The BSE 500 quickly before we go on to our guest for our stock related query. There you go, a lot of stock action, news specific, earnings specific on your screen there. Something like a blue dart on the back of strong numbers, strong volumes, also up 6 odd percent. There's also AB Capital, Gujarat Alkalis, which are doing fairly well, but on the flip side, of course, you have Z Entertainment, Muthoot Finance. This was one of the known accident of the day and is down 9%. Narayana Hrudayalaya is the other one, down 5% as well, and you have GAIL, Latent View, Thermax also seeing the down, even persistent on that list as well, on the red side. But let's welcome in our guest for the day. We are joined by Gaurav Sharma, Vice President and Head of Research at Globe Capital, and Saurabh Jain, Equity Head Research at SMC Global Securities, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I think we've got our first caller for the day. We'll start with a caller. Sanjay is calling us from Bazaar. Sanjay, a very good morning to you. Go ahead, ask your question.
Hi, ma'am. Good morning, ma'am.
Go ahead, ask your question.
Ma'am, Tata Elxsi 100 quantity in correct level buying in 3,700. Short term in please technical analysis, ma'am. Seller road, ma'am.
Okay, got your question. I'll take this up with Gaurav then. Gaurav, what is the view that you'd like to give Sanjay for Tata Elxsi?
Hi, Mahima. Morning to Saurabh and the viewers as well. So, Tata Elxsi is showing some early signs of reversals. Currently trading at close to 3750 odd levels. The immediate hurdle that I see is somewhere close to 3840, 3850 odd zone. Once that is taken out, it has all potential to rise up towards 4100 levels in the immediate near term. So hold is what I am suggesting. Do maintain a stop below the 3550.
Got that view, Gaurav, and welcome to the show. But the next question coming in and has to be on the auto pack, continues to be in focus on the back of numbers as well as the auto sales for the month of July as well. Shankar, who's from Bengaluru, is holding the shares of Ashok Leyland at 156. Now, numbers actually came this morning for the company, have been a good performance, up 33% on a YY basis. He wants to know if the current price right now is good to sell or should he wait for a bit. Saurabh, good morning. What would you recommend Shankar to do? The numbers were good for Ashok Leyland. Should he continue to ride the wave?
Good morning, Puneet. Good morning, Gaurav. In my opinion, yes, the automobile players are doing good, and especially if you talk about the Ashok Leyland, the volume growth is certainly there. And if you look on the valuation side, the stock is trading at the lower end of the long-term valuation on the trailing earnings. My sense is that it is good to hold for the long term.
All right, okay. The next one that we have is coming in from Praveen Torvi, who's writing us from Pune. He's got 4,000 shares of Utkarsh Small Finance Bank. Let's try to pull the stock up at an average price of 21 is what he's saying. And he wants to know the outlook from a 6 to 12 months perspective, whether to continue to hold, maybe average out or sell. Gaurav, what would you recommend him? Because he's bought it at elevated prices. The stock is currently trading at 14.
Maybe it's better to hold as of now because the stock is into a consolidation phase and it is consolidating at the lower band. So there are hopes that it will be able to come up with a breakout. The breakout point is somewhere close to 15.3, 15.5 odd zone, a little far from where it is trading currently, but it is better to hold as of now. Take a stop at 14.
Got that view, Gaurav. But the next question on Action Construction. This has seen some good revival from the March lows. Rajesh Maheshwari, who's from Singapore, is holding these shares at 1070. So close to the current market price. He's been holding on for a while. Wants to know if he should still continue to remain invested. Saurabh, Q1 results were good, were encouraging as well. Would you recommend him to hold this counter now?
See, it is a small company, relatively a small company, but has enjoyed a premium valuation on the bourses for the last many quarters. Since the construction equipment demand is likely to remain strong, I feel that the demand for the company's products and the operational matrices will remain strong. But yes, on the valuation side, I am not that comfortable. But from the long-term perspective, he can hold.
All right. Okay. The next question that we have, I think we've got a caller. Manikanta is calling us from Hyderabad. Very good morning to you, Manikanta. Go ahead, ask your question.
Yeah. Hi, good morning. So I have Aditya Vision shares of 100 shares of Aditya Vision at the price of 620. I want to know the short-term view, how it's can I hold it for a long time or else short time I can hold it?
Okay, got your question. Just trying to understand, when you bought this, did you see the technicals or did you see the fundamentals of the company?
I have seen the Q1 results and I bought it. I see that it was performing well. So that's why I bought this.
Okay. I'll take this up with you, Gaurav, since the time horizon that he mentioned is not from a long-term perspective, because the earnings just came on Friday before market closing. But overall, with regards to where charts go, how do you see them, and do you think from a short-term perspective we can continue to hold?
Mahima, it has performed well in the past. In the recent couple of weeks, also, it is going into consolidation. So, consolidation at higher levels, this is a positive sign. A clear flag and pole pattern is visible. What I prima facie I can see from the numbers that the company posted, they were a good set of numbers. All in all, it is looking good. Any further decline towards say 600 580 zone can be used to add more position if he wants, and remaining he can hold with a stop at 540.
Got that view, Gaurav. But the next question, and viewers, you can also call us on a landline number that is flashing on the top of your screen for stock-related queries. Have a chat with our guest for the same. Next one's on Sun Pharma. Bala, who's from Coimbatore, has been following the company. The results came in last week, he's mentioning, and wants to know if it's a good time to start accumulating now. Saurabh, how did you view the results? We of course had that big acquisitions just a few months ago from the company. What's your view now?
See, it is now after this acquisition, the Sun Pharma will be a global major player, and we have seen in the past that the previous acquisition have been done well and by the company, and this time also the market is feeling that the integration will be good for the company, and the company will expand in the global territory like anything. With respect to the earnings were okay. And in my opinion, it is a kind of a portfolio stock, and we are bullish on the pharmaceutical pack too.
Okay, all right. The next one that we have is from Venkat Ramanan, who's writing us from Bengaluru, asking about either NTPC or Power Grid. Which one is a better bet from a slightly long-term perspective? So I'll stick with you for this one. What would you recommend him?
See, out of the two, I like NTPC. If you see the current the recent quarterly earnings, there was a margin expansion and the good amount of profit growth also. And if you see the data from the IIP data and all, you will find that the electricity demand is actually soaring, which will help these companies, utility companies, especially NTPC. So my take is NTPC would be good.
Got your view, Saurabh. But let's go across to Chennai now. Kunal is dialing in for a stock-related query. Kunal, very good morning. Welcome to the show. What's your query?
Good morning. So I would like to know if it's the right time to enter Wockhardt Pharma, given that they have something coming up by the end of this year, early January as well. So is it the right time to enter? Thank you.
Thanks for your query, Kunal. What would you recommend here as well? Saurabh, because you mentioned about Sun Pharma, of course. Zenic, I think, is the drug that Kunal's speaking about. But what's your view now? Is it a good time to enter?
Yeah, I mean, it is the company has delivered above the market expectation in the past, and the good molecules coming up will give the future profitability growth for the future profitability. My take is better to buy in a staggered manner.
All right. Okay. The next one that we have is coming in, and this is from Nandagopal, who's wanting a view on the logistics space from a slightly medium-term perspective, as which one is a better bet to kind of enter into right now between Aegis Logistics, Blue Dart, Delivery. Gaurav, anything on the charts that you are finding attractive from any of these names? And if yes, at what price levels and what should be the target price?
Mahima, delivery is looking good. After a reasonable retracement, it is trading closer to its 100-period exponential moving average support point. Again, a very fine performance in the past. Therefore, this decline can be utilized as a fresh buying opportunity for a medium term perspective as well. We expect the stock to trade closer to 520, 525 zone, and a breakout happens post that. It has potential to surpass 600 mark as well.
Got it. Also, Gaurav, on Pine Labs as well, if you can give a view. I know it's a very short-term chart since the company listed, so not too much historical evidence. Today, it's up 6% and climbing as we speak. Our viewer, Vedant, has actually bought these shares at 147. So, bought it. I think the stock was down, recovered back again. Should he exit now, or should he wait, probably bake in some gains and then take a call? What's your view?
Puneet, it is completely sideways. The performance in the past has not been encouraging at all. Sell on rise is what I'm suggesting. Since the current price and the buying price are saying so, it is a no risk kind of a zone. Take a stop at 142, and I think this particular move can extend towards 154, 156 zone. That is where he should consider exiting the stock.
Okay, the next one that we have is on a slightly small name. It's on MediAssist Healthcare. Peter from Tichi has bought it at the levels of 385. 20 shares is what he's been holding. He says that he's a long-term investor. Whether he can continue to hold this one or not. Saurabh, any view on this?
I think the stock is underperformed in the last few quarters and the earnings were not that great. And I think it is good to avoid.
Got it. Well, let's go across to to our next caller now. Kaustubh is dialing in for a stock query. Kaustubh, very good morning. What's your query?
So morning, I have 450 shares of Bazaar Finance.
Okay.
At average cost of 696. That is split and bonus adjusted. Okay. So I am having a long-term view, but should I book some partial profit or should I be invested in this stock? That is my query.
Firstly, Kaustubh, many congratulations. When did you buy this? How long have you been holding this counter?
I have been holding it from, around 2022 and onwards. I have been averaging.
Well, most certainly it has paid out. He's in gains of almost 2 lakh rupees here, Saurabh. Bumper quarter one results, right? What would you recommend Kaustubh to do? Is it a good time to book some profits, or should he continue to hold?
Many of the, we have been seeing good results from the banking and finance companies. Bazaar Finance is no different, and consider the fact it is a conglomerate and has outperformed so far this year, gaining more than the bank index or maybe Nifty. I think it is a clear hold. In my opinion, I think the results show a similar picture, and in the future also you will find when the festive season will approach, the companies actually expected to do well. So my sense is it is good to hold.
Correct. Well, the next question, it's coming in on Tarsans, and a relatively smaller name, Sundar, who's from Madurai, bought into these shares, but at 450 odd. So let's look at the 1 year and the 3 to 4 year chart. I think he listed back in 2022. So he's currently sitting on a loss. Wants to know if he should still continue to hold this counter or no. So stock's down 13%, but let's look at the longer term chart too if we can. And Saurabh's question being, because it's a player that's not done well. It's down 60% since the highs, from the highs. What would you recommend him to do? Should he just hold on for a bit, exit at any rise, or what's your strategy?
Won't be able to comment on this, not in coverage.
Gaurav, anything on the charts that you can help Sundar with?
Yeah, so Puneet, in the recent past, the stock has managed to recover reasonably well from its current lows of close to 160. It has almost doubled and that journey has the stock has managed to cover in just a couple of months. So very fine move seen of late. But overall, the performance has been quite dismal. A further rise towards 360 is pretty much possible in the near term only. So sell, gradually reduce your position on rise is what I'll be suggesting. As of now, do take a stop at 280. Stock has potential to give some more up move.
Okay, all right. So that's the view coming in on Tarson's product. The next one that we have is on Divis Labs. Our viewer is asking whether this is the right time to enter. This is a query from Ankit, who's writing us from Chennai. Sort of overall, in terms of numbers, it was a beat in terms of, across metrics versus estimates. And overall, the management has also reiterated the double-digit growth in terms of guidance as well. What do you make of the earnings, and do you think one can enter right now?
The earnings by far were superior than the market expectation. There was a clear good amount of growth coming in the revenues, and the the massive jump in the EBITDA margins is actually surprised the street. In my opinion, I think the stock has run up and is trading at fresh highs now. So my opinion is that better to wait for some corrections and then buy gradually.
By gradually. Got that view, Saurabh. But the next one's from, Priyanka Asher, who's from Mumbai, wants to know about PG Electroplast. She's bought these shares at 509, Saurabh, and wants a fundamental view on her 2,100 shares. The stock's actually seen a very big spike just in the last couple of minutes. But Saurabh, this one has seen a good run up actually in the last 1 month in anticipation of results, I'm presuming. But how are you looking at PG right now? Because last year was a tough one. What's your view on the stock now?
I think in the last 2 years, the stock has underperformed the broader market. And in fact, there is a lot of volatility in the commodities also, which may influence its results on the negative side. I think better to wait for the quarterly earnings. I'm not sure whether the quarterly earnings are out or not. And I feel that the current uptick is kind of a technical bounce. So my sense, it is good to avoid.
Just a follow-up on that, Gaurav, technically what is PG Electroplast indicating?
Looking impressive, Mahima, no doubt. Good amount of consolidation has already happened. It has retraced pretty well from its peak. I think these are possible signs of a reversal coming in. I'll prefer to buy the stock on the rise above 650, 650 levels.
All right, okay, so that's the view coming on PG Electroplast. But time for a rapid fire round. Gaurav and Saurabh, you both know the drill. Try to keep your answers as short as possible. The first one that we have is coming in on MCX, whether this is the right time to enter the counter or not. Gaurav, your view on the charts?
Better to wait for some more time. Buy on dips is what I'll suggest.
The other one's a smaller counter, Pix Transmission. Dilip, who's the regular viewer of the show from Kolkata, wants to know if it's a good time to enter. Saurabh, by any chance, do you cover this one?
Not in coverage.
Gaurav, on the charts, any view?
It is recovering from its support zone. Can consider, but maintain a stop at 1640 on closing basis.
Okay, the next one's on Paytm. Shrikant from Hyderabad has been holding 100 shares at an average price of 1376 since the IPO. Wants to know if he can continue to hold this one, wait, exit. Saurabh, what would you recommend him?
Hold it.
The next one coming on, and this one's on from Harsha from Vijayawada on Vodafone Idea, and it's a stock we've not discussed too much in the last few days. Gaurav, she's bought these shares at 10.75. What's your view?
Clear cut hold. I think it is doing well now. Good amount of recovery is expected.
Okay, the next one that we have is from Divya, who's writing us from Abu Dhabi, asking about J&K Bank. She's got around 125 shares at the levels of 177. She wants to know if this is the right time to average and what should be the short-term target price. Gaurav?
Absolutely average, looking good.
Yes Bank.
Target price can be.
Gaurav, please continue your point.
Yeah, the expected target price can be somewhere close to 180.
180, got it. Next one's on Yes Bank. Kishore is holding these shares at 24.7, Saurabh, asking if he should still continue to hold on for the long term.
You can hold.
Okay, the next one that we have is coming in on Coal India. Our viewer has bought 200 odd shares and wants to know whether to continue to hold or sell this one. Saurabh, what would your view be like, because the buying price is 407?
Hold.
The next one, and this one's coming from Vijay from Chennai. Wants to know about Radico Khaitan, a short-term view, Gaurav.
Just a second. Very positive. Hold the stock.
Okay, the next one's on Fortis Healthcare. Narayana from Andhra Pradesh has bought it at the levels of 966. Continue to hold from a medium-term perspective, Saurabh?
Hold.
Another one from Andhra Pradesh. Bharat has a query on Escorts Kubota. With the earnings come today, Saurabh, he's holding at 3086. What should he do?
Hold.
The next one that we have is coming in on NetWeb Tech. 100 shares bought at the levels of 4950. Siva from Amravati wants to know the 3 months outlook on this one. Continue to hold. Book losses. Gaurav?
Hold and add.
Jaskirat Singh from Bengaluru, he's mentioning a unique way of asking a query on HDFC Bank. He buys 10 shares a month, Saurabh, and I think for the last 60 months he might be buying it at a similar price. But what's your view now? Should he continue to hold?
Do not buy more, rather add ICICI Bank.
Okay, the next one that we have is on Aeroflex. Sumana from Dubai wants to know what should be the immediate target for this one. She's bought 200 shares at the levels of 465. Gaurav?
Immediate target would be somewhere close to 510, 520 zone.
Also, Gaurav, on NetWeb Tech as well, Siva bought these shares at 4950. So certainly at elevated levels, should he wait for that price to come back?
Absolutely. It is probably just a takeaway. The stock has done well. Consolidation has happened. It has retraced down as well. He can even consider averaging it out.
Okay, Zeenath Kausar from Ranchi is asking about Eternal. She's got around 370 shares bought at the levels of 287 and wants to know whether she can continue to hold this one from a medium-term perspective or switch to something else. Saurabh?
Hold.
Alright, so that's the view with regards to where Eternal goes. The stock up 1.5% today as well. But with that, completely out of time on this first edition of rapid fire round. Puneet is laughing at this. But Gaurav, thank you so much for taking out the time. We'll let you go at that. But it's time to slip into a very, very short break. But we'll be definitely taking more queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Hello and welcome back to NDTV Profit. You're watching Ask Profit, and if you haven't already done so, send in your query on the WhatsApp number. Also call us on the landline number, speak to us as well as our guest. And before you do that, we'll start just taking a very quick check of how the markets are doing, because we spoke about 24,600 being a crucial level in the near term that we are watching out for. We are at the high point of the day, but also the advance decline ratio is the other key fact, because the recovery in the broader market has somewhat been pale over the last week. Today though, it's a very strong session that we're seeing, almost 5-1 in favoring of the advances. And we of course spoke about the individual names, a lot of result reactions today. We'll focus in a little bit on Persistent as well. But let me welcome in Ajit Mishra now of Relicare Broking joining in as well. Ajit, thanks so much for joining in. Very good morning to you. Let me first just go across to a quick caller from Tamil Nadu. Sujamani is joining in for a stock query. Very good morning. Thanks so much for joining in. What's your query? We seem to have lost the call. I don't know if he didn't like my voice, but on Turtlement is the query that Sujamani had. Buying price of 152 odd. Is currently sitting on a loss. Wants to know what he should do with this counter. I don't know, Saurabh, it's a very recent counter, so not too much historical evidence, but Anything that you can help Sujamani with? It's down from that 152 or mark. What's your view now?
Not in coverage, Puneet.
And I think Ajit might be a little too difficult on the technicals as well. Just last week is when it listed. So probably Sujamani, do try dialing in the next time. I will recover my throat and come back as well. But the next query coming in, and it is on persistent as well. Our viewer Manoj is holding shares at 4311. Wants to know if we can hold on to for another year. He's certainly in gains, Saurabh. But how did you view the recent results, and what's your view?
See, on the IT pack, we are not sure whether the earnings will be improving or not, especially for the big companies. Considering the persistent fact, I think the earnings were, in fact, in line or somewhat better than the expectation, considering the fact that many of the peers have seen deterioration. So I think it is a kind of a profit taking. If you have a long-term horizon, then keep on holding. If you have a short-term horizon, then better to move profits.
Okay, all right. So that's the view coming on persistent systems. The next one that we have is on Narayana Hrudale. This is from Gopal. It says that he wants to kind of buy this counter for the next few months and wants to know if this is the right time to enter the counter or not. The stock has taken a knock, of course, on the back of numbers. But Ajit, would you recommend buying right now, considering the stock has fallen?
Good morning, Mahima. So, good morning, Puneet. So, what we are seeing at present is just a normal reaction because it was the previous swing high close to around 2100 mark, which the stock tested before the numbers, and post numbers we are seeing marginal pullback towards the major averages. So close to around 1850, 1900 is a zone basically where we have multiple supports, moving averages on multiple time frames. So he can continue to accumulate on dips in this range of 1850 to 1900, and since the view is short term, 1700 on the closing basis should be stop loss. In the next run, close about 2100 would trigger the next leg of momentum.
Got it. Got that view, Ajit, and welcome to the show. The next question coming in on Concord Biotech. Viewers bought these shares, and this is Sabita, at 1200 rupees per share. So it did travel to almost that 2000 mark, and then in 2024, and then has retreated, seeing a second leg of move here, Ajit. Wants to know about the short-term view. What's the view on the charts now?
So Puneet, now it looks favorable considering that the stock has already witnessed a sharp correction from the record highs from 2600 to roughly around 1000 levels, and in the last couple of months we are seeing gradual recovery. Means of late also we have seen a base formation around the major moving averages on the daily chart in this range of 1250 to 1400 before this breakout. So price action, volumes plus the support of the moving averages, all this indicates that possibly we are set for a reversal in the trend after this corrective phase. So gradually it can inch toward 1400, 1700 zone first, and then towards 1900 plus area. So with stop at 1300, definitely she can stay put.
All right, okay, so that's the view coming on Concord Bio. The next one that we have gotten is on Apollo Microsystems. Praveena has bought it at the levels of 420. I think let's try to pull the stock up and see as to where it's trading at right now, 397, and wants to know whether she can continue to hold or exit. She's not mentioned the time frame, but Saurav, I'll come to you on this one. Apollo Microsystems, what's the view like?
I think if you look at the valuation, looks expensive, trading around 25 times to book value and 11 times to 125 times to trailing EPS and 10-11 times to book value. And if you look at the earnings, the company is posting good amount of growth. I think if you are making some money, then better to take some money off the table.
Got that view. But the next question, and this one's from Satyan. He's holding on to Amara Raja at 1130 though. So he is currently sitting on a loss. He's mentioned that he's been holding this on for a while. Let's also look at Exide today because results came in just late last week, and see what that counter is doing now. It's up marginally at this point of time. He wants to know, Saurabh, if he should still continue to hold and what's the expectation now?
I think, especially looking at the valuation, I think it is trading at the lower end of the long-term valuation, both at the trailing EPS and on the book value side. I think largely if you look at the earnings from the Exide, they were good. I am not tracking the Amaraja battery. I'm not remembering the what was the earnings. But yes, there is no point in selling right now. I think do not buy more, but at the same time keep on holding.
Okay, all right. The next, I think we've got a caller. Sudhakar is calling us from Hyderabad. Sudhakar, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning. I have purchased 300 shares of Afcon at the rate of around 456 rupees.
Okay.
Now the price is around 278 rupees only. So what is your advice regarding I should hold it or sell it off? Okay.
What was the thinking behind buying this, Sudhakar? Was it the charts that you saw? Did you see the fundamentals of the company?
No, I just applied for the public issue and I got allotment at that rate. Not any bought in the secondary market.
Okay, got it. Okay. So you're holding it since the IPO. I'll go to Saurav then. What is the view here? Because he's sitting on a loss of around 54,000 rupees.
I think wait for if the June quarter earnings have come. I don't know if they haven't come, then wait for the June quarter earnings and see what the management is saying. On the valuation side, it looks at the lower end of the valuation. The stock is trading, and in my opinion, I think after seeing the earnings, then take a call.
Got your view, Saurabh. Definitely, earnings have been weaker for this counter, but continue to monitor as Saurabh mentioned. But the next one coming in, and this one's on Varun Beverages actually. Mings from Delhi has been holding on to these shares for the last 2 years. So currently sitting on a loss. He's average down is what he's also mentioned. But he's asking what action should he take now? Should he continue to hold or sell out, Saurabh?
I think, in my opinion, these 6 months are usually good for the companies like Varun Beverages, but last quarterly earnings was not up to the street expectation. That is why I think some profit taking has come. I think wait for the September quarter, and maybe you see the stock moving up again before the festive season begins.
Okay, all right. The next one that we have is on Irida. Chitra from Chennai has been holding 200 shares at the levels of 118. Wants to know whether to continue to hold or sell. Probably it's results day today for this one. Ajit, would you recommend her to continue to hold, seeing the charts, because she's already holding, although it's generally not advisable to trade on the day of earnings. But since she's already holding, what are the charts indicating?
So Mahima, the good part is that she bought it at the lower end, means majority of the investors are stuck at the very higher levels, and the stock is already up from our buying price. As you rightly mentioned, that speculating on the day of results is usually not recommended, but still, since she's holding the long position, 119 should be her trailing stop loss, because the overall trend has not reversed yet. We are just seeing a rebound. And for this rebound to further carry, we need a close above 126 mark and then towards 132. So short-term buying can still be maintained with 119 as a stop loss, and above 126 she can book complete profit around 130 levels.
Got your view, Ajit. But let's go across to New Delhi now. Ahmad has a stock-related query for us. Ahmad, very good morning. What's your query?
Good morning to everyone. Actually, I am holding 200 shares of Guardium IVF and healthcare stock. So, and this average price around 130 rupees. Okay. But this stock is being put under periodic call auctions. It has been put under this twice in about a month. So, what is the risk involved for a long-term investor? Or long-term investor is not affected by this periodic call auction?
Okay, got your question, Ahmad. Saurabh, I don't know about the specific query or what it's put into, but a fundamental opinion if you have on Guardium IVF at this point of time?
This is a niche hospital, specially designed, especially for the IVF, for the parents looking who are struggling with their child. I mean, with the childbirth. Especially, we are optimistic on the hospital, but certainly it is a new listing. Can't say how the future is expected to plan out. I would rather recommend him to switch his money from Guardium to maybe a company like Rainbow Child, which is much better an option, or maybe Apollo Hospital.
Right, okay. The next one that we have is coming in on Muthoot Finance. Rakesh Gupta from New Delhi is holding 100 shares, bought at the levels of 2808. Considering the numbers, of course, today it's seen a downtick of around 8.8, almost 9% as we speak. But he wants to know whether he can continue to hold this one or sell at the current market price. So I'll stick with you for this one. What do you make of the earnings, and what would you recommend our viewer?
See, today's reaction is certainly not for the growth that the company is putting in, but it is largely because of the market is sensing some kind of a competition coming in, because net interest margin of the in this quarter for Muthoot Finance has cooled off significantly, which was not expected by the market. So that is the result because of which the stock has tanked down. I think going forward, markets may adjust the valuations of Muthoot Finance accordingly with the dip in the net interest margin, and it may happen in the ensuing quarters also. So some kind of a consolidation is expected rather than the perpendicular rise which stock has seen historically. So if you want, you can book profit from the table.
Got it. The next one's on UPL. Mihir, who's from Mumbai, is holding the shares at 610. Wants to know a 6-month view of this counter. But Ajit, from the start of the year, this has been underperforming. Would you recommend him to hold for the next 6 months? What's your view?
So Puneet, yes, means from 800 to 550, 560 levels. So it was sharp decline, and it's been almost 3-4 months now that we are seeing volatile swings continuing in the stock. The good part is that after retesting its previous swing lows, we are again seeing the stock witnessing recovery, and we are currently hovering around the 100 EMA mark. So let's say once we cross this hurdle of around 622, 623, probably it might attempt retest of the long-term averages around 640 area. So it's a hold with 590 as a trailing stop loss, and around 640 you should review his position again.
Got it. Let's quickly pull up how Persistent System is doing as well. Now, there was that Forex impact on the other expenses, and hence you saw that stock react on that, because if you put that impact through, the EBIT margin has come in at 13.5%. You also had a lot of views going into the results. You had a very good results coming in from Coforge, and hence the pressure definitely on Persistent to deliver to 4.2% constant currency growth is what the company has delivered. But it's also important to get some perspective of the management as well, and how the company has performed, what is of course the AI revenue part as well. And that would be some of the key aspects from the conversations. My colleague Neeraj Shah, who of course had an insightful conversation with Sandeep Kalra, Executive Director, as well as the CEO of the company. Let's listen into a bite of what he had to say about the results, as well as what he's currently seeing on the ground. Let's listen.
Well, IT needs solid results from select companies, and Persistent hasn't disappointed. Beat estimates. Revenue grew about 4.1% constant currency quarter on quarter. I think the estimates were about 3.1%. The TCV is very strong as well, up about 120% YOY, and the ACV looking fairly solid too. Sandeep Kalra joins in right now to talk about how the start of FY27 has been and how the year ahead could shape up to be like as well. Sandeep, great having you, and good talking to you in quick succession, considering we also spoke after your acquisition. But let's start off with how you think the quarter went by. One, on the deal wins, and two, on the nature of the conversations with clients right now.
Yeah. So first of all, Neeraj, thank you for having me. From a quarter perspective, as you rightly said, we delivered well on the revenue growth. We had a fairly good quarter from a order booking perspective. The client, discussions are healthy. Some of the deals are taking a little bit more time, but we had a fairly good conversion, and the pipeline is pretty strong. From a large deal perspective, as you rightly mentioned, we had a large deal of $650 million TCV perspective, 125 million plus on an annual contract value perspective. We had seen a little ramp up of that in the last quarter. Full ramp up will happen between this quarter and the next. Most of it happening within this quarter itself, since it involves supporting multiple products, including even taking over people. From that perspective, it should have a fairly decent impact on this quarter and for the full year as well. So that bodes well for our full year growth, to your point.
Got it. Okay, Sandeep, can I ask a follow-up on that before we move on to the other aspects? So on deal wins one per se, for this particular deal, the large one that you've done in, or for deal wins in general, what is the breakup between what is, I mean, if you can do that kind of a breakup between what is AI led versus what is still traditional services per se, part one of the question, and because it's a large one at that, does it impact your client concentration metrics that you speak so strongly about, and how much you want to diversify?
Yeah. So I'll go the reverse gear first. Does it impact the client concentration metrics? It does. But having said that, at one point in time, if you look at it, a lot of our analysts and even people like investors, big investors, wanted us to have more than $100 million accounts. So from that perspective, as we have grown up, and today we are at a $1.7 billion plus run rate, 1.8 plus. In the next few quarters, as we had said, aspirationally we want to be a $2 billion company. From a run rate perspective, quarterly run rate into 4, we'll achieve that pretty soon in the next 1 to 2 quarters. And so from that perspective, even if the revenue goes up, the percentage client concentration will also moderate over a period of time. So we're not worried about it. It is, in our mind, a fairly healthy growth. It also proves the point that if we can work with some of the largest technology companies in the world and sign deals of this extent, we can fairly well work with Fortune 500 companies, whether they're product companies or enterprises. So it bodes well. Not worried about the client concentration. It will moderate over a period of time.
Got it. Okay. Now, very strong revenue growth as well. This is what, Sandeep, if I'm not wrong, please correct me if I am, but what, the 25th straight consecutive quarter of growth quarter, right? And I think individual verticals, healthcare, life sciences, etc., all of that did so well. What is the client sentiment right now in terms of spend, in terms of dialogue, and in terms of paying the buck that you may seek as a company while you are trying to do, while every company, whether products or services, is trying to get this AI layer in their offerings?
Yeah. So multiple things in there. So if you look at it overall from a revenue growth perspective, not just this was the 25th sequential quarter of revenue growth, with a large deal, hopefully, it bodes well for the next quarter and quarters as well. So from that perspective, the team has executed impeccably well, and I couldn't be more proud of the team. Now, in terms of client conversations, there are obviously different, buckets of discussions. On one side, people are trying to do cost optimization, and the AI part is also a lever towards a cost optimization. So even the large deal that we have won, it is basically where we are taking over product from multiple different SaaS products, optimizing the product engineering side of it, whether it is feature enhancements, whether it's sustaining engineering, support, part of the product, or even the cloud operations. So AI is enabling us both sides. On one side, cost optimization. On the other side, even revenue enhancement, new business models, outcome based, and so on and so forth. So AI is a lever in both of these. And in our mind, AI will get into every part of the things that we do. And we are building platforms to be able to showcase. Some people will take those platforms. Sometimes we will do it on frontier models, different technologies. But discussions are pretty good on both sides. Both cost optimization using AI and using AI, newer business models, newer revenue growth engines.
Well, that was Sandeep Kalra, of course, of Persistent Systems, and we'll play out a chunk of that conversation again. That was his conversation and his view on the large deals as well as how the company looks at it. And let's get back to your stock-related queries now, and we'll just start the rapid-fire round in post this question. This one's coming in on from Germany. Avinash wants to know about Gen Resource Recycling. He's bought these shares at around 323 odd. Wants to know if he should continue to hold his 500 shares. Saurabh, what would you recommend? Any view on the stock?
I think that on the operational matrices, the company has done well in the past, and the company is doing some kind of a niche work. So, in my opinion, yes, you can hold it.
That's the view coming on Giant Resource. The next one that we have is coming in from our viewer who's, I think, writing us from UAE, asking about Morpin Labs. He or she has bought it in September 2024, 1,000 shares at the levels of 94.5. Says can wait for only 6 more months. Target price on this one, Ajit, what would you recommend?
So Mahima, the stock has rebounded swiftly, but again, we are seeing that a breather around 65-70 zone, the previous swing highs. So once, let's say, we surpass this area, then probably 75 plus area is something that the stock might test. So as of now, it's a hold with the immediate base at 53 as a stop loss.
Correct. The next one's on Biocon, and Ajit, let me stick with you on this one. Wilson from Mumbai bought these shares at 429. Wants to know about the counter, if he should still continue to hold his 1200 odd shares. After a really long time, Ajit, we've seen that sustenance of move above 400. Is this the one that continues?
So probably yes, Puneet, because if see pharma being one of the top performing sector alongside with the healthcare basket of late, and Biocon, though it has not participated the way we are seeing some of the other counters have done well. So maybe as a second ranker, we'll continue to see this gradual up move continuing. 410 now being the base area. With that as a stop loss, you can definitely stay put. In the next leg, 445, 455 is something the stock might test.
Okay, all right. So that's we coming on back on. But it's time for a rapid fire round. Ajit and Saurabh, try to keep your answers as short as possible. The first one that we have is on Thomas Cook. Arvind Manjeshwar has got 100 shares at the levels of 158. From a 1 to 2 year perspective, continue to hold, Saurabh?
Hold.
The next one coming through, this one. Okay, let me take another question on SMS Pharma. Short-term view is what Venu wants from Hyderabad. Ajit?
Book profit.
Okay, the next one is on BSE Limited. Our viewer says if this is a good time to invest into this counter from a really long-term perspective. He's quoted 10 years. Saurabh, what would you recommend?
Looks expensive to me. Wait for the lower levels.
Gopal Krishna is holding on to Kaplan Point. He wants to know if he can sell out at this point of time. Ajit has done well in the last year. Should he do that?
Book partial and maintain a trailing stop as 2400 mark.
Okay, the next one is on Oracle Financial Services. 1 to 2 year horizon. Is this a good time to enter the counter, Saurabh?
You can buy in gradual manner.
Next one's on Torrent Pharma. Saurabh, our viewer wants to know if it's a good time to enter for the long term now.
Yes, you can buy.
Maruti Suzuki, good time to enter from a medium to long term perspective. Ashish from Bengaluru wants to know. Saurabh?
Buy in a staggered manner.
Heritage Foods bought at 537 by Purnima, so at elevated levels here. Ajit wants to know about her strategy, if she should still continue to hold.
Yeah, so seems like consolidation. Around 400, review the position. In the interim, maintain stop at 310.
ICTC is the other one. Sriram from Hyderabad bought 25 shares at an average price of 825. Continue to hold, average, sell the stock. Ajit on the charts.
Technical rebound likely around 550. Review the position. In the interim, 490 stop.
Also, Ajit on Northern Arc as well, because Rakesh is holding these shares at 316. Stocks trading at 292 now. What's your view?
So can see a breather after this corrective phase. Maintain a stop at 280 and around 310, 320. Reduce position.
The next one is on LNT. Vignesh from Bengaluru is holding 30 shares, bought at the levels of 3,800. Add more at the current levels. Saurabh, your view?
Yes, you can add. Keep on holding for long term.
Pawan Kumar bought Tata Power 4 years ago at 200 rupees. Saurabh, he wants to know if he can hold for the next 5 to 10 years. Should he do so?
Yes, you can hold and can buy companies like NTPC or NLC India.
Okay, Keynes Tech is the other one from a medium-term perspective. 2 to 3 years is what our viewer has mentioned. Continue to hold this one. Bought an average price of 3456. What would you recommend, Saurabh?
Book some profit and keep on holding.
Manish holds on to Shiva Cement at 45 odd rupees. He wants to know a long-term view. Saurabh, should he just switch to a bigger player? JSW Cement owns it, of course, but what's your view on the stock?
Better to switch to bigger player like JSW or maybe Ultratech.
Okay, the next one is on Crisil. Siva from Amravati has bought it at the levels of 4250, 3 months perspective. What would you suggest? It had given a good breakout, but now getting into that consolidated zone.
So yes, possible up move above 4550 expected. So with stop at 4200, stay put.
The next one coming through, this is from Bhaskaran. He wants a fresh investment into a nationalized bank. Saurabh, what would be your recommendation?
You can go with the Indian Bank, Canara Bank or Bank Product.
Okay, Thangamide is the other one. Jayakrishnan from Kerala has bought it at the levels of 7230 and wants to know from, I don't think this buying price is correct, but from a 6 months perspective, Ajit, what would you recommend him? Can he average at the current levels is what he's asking. No, probably this buying price. So he's bought it at the highest point. and wants to know if he can go ahead and average this one.
So I guess it's continuing its sharp decline, and pretty close around 4400 mark is something that might take a breather. So avoid any fresh heading, hold with 4400 as a stop, and use recovery towards 5500 to review the position.
Also on M&M Financial as well, Ajit, if you can give a view. Our viewer Ashwini has bought at 375. Stock's done well recently. Should he continue to hold?
Book partial profit and trade stop loss at 384 for remaining trade.
Fine Labs is the other one. Radhakrishnan from Bengaluru wants to know the 6 months outlook for this one. Right time to enter, Ajit?
Overall trend is still down. We are just seeing a rebound. So with stop at 135, one can look for a rebound trade towards 165, 170.
Got it. The next and the last question for today is from Sanjay from Bengaluru. Wants to know between Suzlon Energy or Inox Wind, what's a better pick to enter, Saurabh?
Suzlon Energy is better pick.
Got it. Well, that was the last question of the show, as well as the rapid fire. Ajit as well as Saurabh, thanks so much for helping us solve 72 queries that we have in the last 1 hour. Appreciate your time as well as your inputs. But viewers, out of time on this edition of the show, thanks so much for watching. Stay tuned, a lot more queries on the other side at 2 p.m. So we'll see you there.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is a very interesting show where we get you the hottest companies, and at times we also get you some interesting multi-baggers as well. But today also there is a very interesting stock to talk about. It's an Ahmedabad-based NBFC company, and recently they have come out with a good announcement as well. We'll get that as well. Second hint is the stock is up 41% from 2024 lows. And also one more hint I would like to give you, the Q1 numbers were largely stable, and that 16,000 crore AUM mark has been crossed. So that's of course a big milestone for the company. And interestingly, Nippon has 8% stake in the company, and we know these schemes have good exposure in small caps. Today in KYC, we will be talking about Mass Financial Services. This is the company on the screen which we can get. This is the company we are talking about. But why are we calling this right now? What's the relevance right now? Is the NBFC cycle going to go up? Because it has tested the patience of investors. So the first question we definitely need to ask, is there agency order win coming in from Unique Identification Authority, UIDAI? That is the first question we'll be asking. But company recently came out with its numbers also. So we'll get the AUM and the operational guidance. Is there any variation at play? They have exposure in Gujarat also. And you remember, is the underwriting model, how does this actually work? Will it get impacted? Why I'm talking about Gujarat is because floods were there recently. That's why there's a risk. Macro risk is definitely there, and energy prices in those portfolios, has that been hit or not? Because they have exposure in the SME space. And is the cycle turning? And if yes, are there any green shoots, or we need to wait it out? That's the big question to be asked from the company. And also the NIM and credit guidance, how they're able to maintain it despite such a volatile market. So we need to understand what is the company's overall mentality in this. Also, the near-term pressure on the conversions, that's what the brokerages have raised. We'll try to get that clarity in as well. And lastly, apart from these questions, there is any expectation of a credit rating upgrade. If that happens, the cost of borrowing comes down for the company, and Street is expecting this should happen. But let's understand and break, or peel by peel, let's understand what are the nitty-gritties for Mass Financial Services here. First of all, it's an Ahmedabad-based NBFC. It was established in the year 1995. Another important point, they offer micro enterprises, SME, two-wheeler, CV, salaried and housing loan segment as well. Of course, the coverage is pretty big. They have 283 branches across 13 states. Well covered, but it's expanding from a regional player to a pan-India player. This is of course Nippon India Mutual Fund having 8% stake in the company and roughly 15% stake from the domestic mutual funds. The Q1 numbers, let's do a revision. This had come in last week. Healthy AUM growth and resilient asset quality was there despite tough macros, and that is the strength of a company in these times, how they underwrite, and we'll try to understand that from the management as well. 80% loans are on-book AUM. Now you must be wondering, what does on-book AUM mean? On-book AUM is nothing but overall portfolio is taken under the balance sheet of the company itself, and that is Mass Financial Services here. But what you should know, this is very much important. A lot of viewers write to me that, Sharad, please decode all these words, and remember, it's very easy. Gross NPA, lower the better. That's the asset quality, and NNPA is the same thing. That becomes the net NPA, and net interest income. This is also pretty much interesting. This is higher the better when you're analyzing an NBFC company or when you see the P&L. ROA, ROE, these are of course the return on equity and return on assets. These are basic numbers which the company gives out in the press release. You should have a look at that to understand how things are moving. Also, apart from this, NIMs, net interest margins, that's what we have done earlier. So just a revision of that. But let's move on. After this revision, now you know what to track. But what are the recent announcements? And that is where the Street is looking at. They have received an approval from Unique Identification Authority of India. You call it short form UIDAI. Now why this is there? This is coming in from Protein eGov. And if you look at it, this is for authentication and KYC user agency. So likely neutral to positive announcement coming in recently for Mass Financial Services. But let's move ahead and understand more. How does the loan book breakup look like? MSME, that is 80%, India's backbone, MSME, 80% of that loan is coming here. That means in case an inflation or a macro event happens, this gets the hurt most. Maybe that's the reason why we haven't seen the stock moves going very high and in a big consolidation range over the last, we could say, 4 to 5 years. The distribution, the direct retail is still 67% happening, and the balance 33% is coming in from your retail asset channel. So this is very much important to understand the distribution. But what may work for the company, because stock hasn't moved so much. The valuations are attractive right now. That's the first reason. point out the second one, they are de-risking across geographies, products and distribution channels, and it's being seen in the numbers, a very robust number in a challenging environment, and I must congratulate that to the management. Third important reason, let's have a look, and that is the credit upgrade that's likely to come, what channel checks or industry is estimating, so their cost of funds might come down as well. Apart from this, also the sectoral tailwinds are expected to kick in because NBFCs have been out of flavor in the Lal Street for the last 2 to 3 years. Maybe that pressure is bottoming out as well. But what may not work, near-term pressure on the conversions. That was a case raised by the broking houses. Gujarat floods impact, is it there or not? In the con call, the company had mentioned that the impact is not there much, but we need to understand, what happens in the second quarter, and the macro headwinds, they are still there, especially with the loan portfolio, जिसको लोन देते हैं, जो energy risk में ज़्यादा impact आता है. So this is the entire picture for Mass Financial Services. But let's understand more in the KYC ratings which we give. And whenever we get an NBFC company, I tweak the overall ratings, because in order to do that, we need operational parameters, asset quality, return ratios. This is much better to look at. Largely balance sheet is well maintained because they have to follow RBI. So it's no point doing that because it's a stable number. Also the usual shareholding street cred which you already know, and the valuations, I'll try to understand why I'm trying to say that it's at the cheapest levels right now. But will it be cheap because of the pressure in the industry? That's the question I'll answer for you. Also, let's look at the income statement. We always see the net interest income, which I pointed out, and net profit. Let's look at the yearly picture and how things have gone up. It's almost, most of them have gone up by 1.5 to 2 times most of the parameters. So it has been doing a good journey all throughout as India's credit story also pans out, and this is very much important because that's the SME segment, and strong growth coming in, of course, on a year-on-year basis also. A lot of parameters in the income statement you track year-on-year basis, but things like asset quality, NIMs, you should check sequentially also. I'll get back to that, but you need to hold on with me. So net income statement is a strong positive right now. Also, let's move on and understand the second important factor, that is the operational parameters, cost of funds, net interest margin, cost to income, how things have panned out. I've taken the long-term perspective, of course the Q1 numbers are also out, it's almost more or less the same, but largely it has been pretty good. See it from a longer time of view. If you're a long-term investor, then it will be much more sense it will make for you for KYC. And net operationally also it is showing a good strength. Loan book also going up very nicely from 8,900 odd crore rupees, almost touching that 15,000 crore mark. I had mentioned you the 16,000 crore number. Remember, that is the combined consolidated numbers which I'm talking about. So net, this is the loan book also showing a good strength from the operational parameters. But let's talk about the asset quality, how things are moving. It's very much important to understand how things pan out. Largely asset quality should come down, but it has more or less been at the same levels. Talk about gross NPAs, talk about net NPAs. It has not gone really bad, seeing what the condition is looking like. So that is where the conservatism of the management comes into play. Let's pull out the net NPA also to show you how things have been there, and they have maintained it. So that's a good sign actually. So I'm keeping it a neutral rating right now, because if the cycle turns, then the company starts benefiting. But yes, that will take time, and that is why you need patience in the stock markets. Let's move on from operational parameters and understand the return ratios, ROAs and ROEs. Nothing much has changed, to be honest. It's been very stable. So I'm going to give this a neutral rating and move on. Apart from return ratios is the shareholding pattern. Let's see what things have moved. Promoters' stake is still there at 67%. FIs on the lower side 3%, but DIs, look at that. A lot of mutual funds are taking good positions here. And largely FIs have increased their position, and a very minor fall coming in for DIs. Rest, everything is quite similar on the screen. So I'm going to give this a neutral rating as well. But let's talk about street cred, and this is one of the most important parameter to track. And for Mass Financial Services, if you're a long-term investor, technically money has not been made. It's just 21% of returns coming in here. That means a long period of consolidation the stock has been Now, will that change or not? That is the big question to be asked, and wait for that because I'm going to get you the valuations just after this, so then you can make your decisions. But from June lows, it's up 11%, it's decent. From 2024 lows, it's up 45%. So for the medium term basis, the company has made money, but for the long term, definitely they haven't made money. It's just 21% return. So yes, patience has been tested in this counter. To balance things out, it's a neutral rating from my side when it comes to street cred. But listen, the valuations are very attractive. Look at that. It's below the 2 price to book ratio. If I talk about the 12 months trailing price to book ratio, so that means there's a good, valuation catch up to be done. 3.8 times was the valuation at its peak in the last 5 years, and the average also, it's down roughly 30-35%. It's at 2.6 times. So it's, of course, valuation wise, it's extremely cheap right now, and that is why I'm going to give this a strong thumbs up when it comes to the valuations for Mass Financial Services. Let's talk about outlook. A lot of stress is coming in, but the management is somehow maintaining their guidance for FY27. The target is 20 to 25% AUM growth. They are sticking by it. Second reason, housing finance, a 35% CAGR growth over the medium term they are expecting. So all these are guidances. Take it with a pinch of salt because these are a long-term or medium-term guidance. NIM guidance, despite what's happening, they're targeting a conversion of 8 to 8.5%. So that's a big statement from the company. They do not expect any material asset quality impact from floods in Gujarat. This is an important statement in the con call. So net, it's a strong thumbs up when it comes to the total outlook. So we spoke about all the 8 KYC ratings. But let's understand, and give you a revision of why I've given the rates and what's the overall KYC rating for Mass Financial Services. Income statement and operational parameters have been really strong. Take everything on the long-term basis. Asset quality, pretty decent. The return ratios have been quite flattish here. On the other hand, shareholding, street cred, for medium term, money has been made, but for long term, the patience has been tested. Looking at the valuations, very attractive right now because the stock is under a massive period of consolidation. And if you follow technical charts and fundamental, you'll understand what I'm trying to say and the outlook as well. So overall, on the higher side of the average, we give 6 out of 8 for Mass Financial Services in KYC. But our conversation continues and we'll have Dhwanil Gandhi. It's a very interesting second generation face, executive director of the company, and also some important details about him. He has more than 10 years of experience in the company. Of course, he started the SME lending. He's developing that, and important approvals in the insurance was under him. ISB Hyderabad, Kellogg, LSCA, and NSU. He's the alumni of these important institutions. So the conversation continues with Dhwanil, but just after a break. Oh, well, Dhwanil is already with us, so it's always a pleasure to have you. Dhwanil, good afternoon. It's Sharad here. First of all, UIDA approval which has come in. This is an agency approval from Protein. What does this mean for the company?
Hi Sharad. Hi, thank you for having me. Good morning. So yes, late last week, we got the UIDA approval for doing sub KOA, AOA licensing. So that helps us a little bit on the operational side. Earlier, we were using third-party agency services for certain authentication services. Now we can do that ourselves because we hold the license ourselves. So operationally, it helps us a little bit. We went through a very rigorous UIDAI audit, and finally the approval has come in. And our IT team will be working in integrating that approval in various processes of ours. So that's the update on the latest license that we've seen from UID.
Right, Dhwanil, recently the company came out with its quarterly numbers also, and despite what we are seeing the pressure in the market, largely we see that you have come out of it, unscratched. But I want to understand some numbers from you, the guidances which were there in the con call, AUM and the operational parameters. What are the key guidances for FY27, the growth numbers, if you could share with us?
If you notice, the number has been inching up since last 2 to 3 quarters in terms of the AUM growth, both on quarterly basis and Y-on-Y basis. So this quarter we clocked around 21.5% in terms of AUM growth. And going forward, we are confident that we could be anywhere between 21 to 23% in terms of AUM growth for this financial year. The target is to be on the upper band of our general guidance of 20-25%. But looking at the overall macro situation, we will be little watchful. But with festival season coming in, Q2, Q3, Q4 are generally stronger. So we are hoping that 22 to 23% AUM growth. And if we get an opportunity to accelerate in the later quarters, maybe closer to 24-25% is something that we are targeting for this financial year.
Fair enough. Let's understand, or if you could just help us out with decoding this underwriting model of yours. You can go in detail. We want to actually understand that, because you have done a very phenomenal job in last 2 to 3 quarters. There was so much stress coming in this space from SME, and largely nobody was talking about it. And that's the key reason why I have got your company to understand what is your underwriting model, how does it work, what's the process. If you could explain us in detail.
Right. So if you go back around say 4 to 6 quarters ago, I think in and around when the US tariffs and all came in, we were slightly circumspect on the overall market situation in certain geographies and certain sectors since then. So I think what has helped us on the underwriting model is having our ears very close to the ground, a very long vintage of 30-31 years, which has helped us fine tune this model continuously. And the risk team that we have, which is continuously working on the smallest of parameters, because over here what happens is that you have to work on a lot of small policy parameters continuously, look at early warning signals, keep on tweaking those, and do the needful in terms of the business growth as well. So I think we were little watchful on certain segments like textile, FMCG, certain trading businesses, and we had gone a little slow on that. Even if you look at the growth, we had slowed down the UM growth to around 17-18% for a few quarters as well. So we are never shy of taking the foot off the pedal if we feel that the asset quality or the kind of proposals that are coming in are not that great. So I think a combination of our early warning signals, policy tweaking, compromising growth a little bit for asset quality and profitability, a combination of all of these things have helped us to keep the asset quality in check.
Yes, that's true about that, because it has not, gone that bad compared to what you are operating at. But I want to understand a little bit more about the details, about your customers, especially who are getting the shock from the oil prices, or maybe the Gujarat floods. That impact might be seen in the second quarter. I wanted to understand, how this stress is there, and if there is a stress, is it significant?
So when this Iran-US war happened, and there was a little bit of stress on the overall supply of energy, gas, and petrol and all, we had slowed down certain segments of businesses like petrol pumps, restaurants, or business or manufacturing businesses which used energy of any form in terms of their input. So that is something that we had taken the call in Q4 and the first half of Q1, and that has helped us, keep the asset quality currently in check. Honestly, asset quality impact starts kicking, or you start seeing that 2-3 quarters down the line, because you do fresh lending, which and the asset quality doesn't necessarily start going bad, or you don't start seeing stress immediately. But there are other signs like early bouncing and all of those things which you can observe. But to err on the side of caution, we had already slowed down on certain segments because of this energy volatility. And on the flood side, I think we are still assessing the situation. South Gujarat certain parts of South Gujarat are more adversely hit, but our team is assessing the situation right now. But we feel that the impact may not be that bad, and I think our customers will come out unscathed out of this as well. There could be temporary blip in terms of their working capital cycle and inventory, which they will have to refill again. So maybe 1 or 2 months here or there, their business can go a little bit of haywire. But other than that, we feel that they will confidently bounce back.
All right. So a little bit of blip, and that's, of course, you cannot help that. But I want to understand, because you gave a hint that NBFC cycle might be turning. Of course, it won't turn this quarter, but maybe in 2-3 quarters. So timelines and what are the green shoots? So we have spoken a lot about the pressure, but I'm sure there are green shoots also in your industry. There's smart money moving into a lot of NBFCs, which we have seen in Dalal Street. But what are the green shoots? What's the other side? Next 2 to 3 quarters we can see.
So I think in terms of green shoots, number one will be hopefully what we are seeing recently since last 2 3 days. If this crisis dies down and if inflation and all those things get under control, and if RBI is keeping the rate steady, I think that can help in kickstarting another growth cycle. Overall, market has been good. The demand has also been very steady. So we feel that if everything stays like this, and if things don't deteriorate further, I think with festivals and all coming in also, which is important in retail lending, retail finance, I think next 2 to 3 quarters can be good in terms of the growth and the customer demand. And another green shoot is obviously the overall market size. So the market size is huge. There's a lot of under penetration in terms of the credit. So I think all those things can also come in, and also the ECLGS scheme which is going on currently. So we are also trying to figure out, talk with our customers in terms of the requirement for working capital and the additional facility that we can provide to them in terms of the ECLGS which government has granted. I think all of these things will help in the coming 2 3 years.
Right, so 2 3 important factors coming in, and Dwanil, you're right, as an industry spokesperson, and also what the analysts are talking, it's matching and definitely something to watch out for. Even I picked out this point in our analysis. But the NIM and credit guidance, how does that work out going ahead? Because you have maintained that guidance, that 8 to 8.5%. So going ahead, do you think this will sustain or any kind of a pressure you can expect in Q2?
No, we feel that it will sustain at current level. We feel that the cost of borrowing has kind of bottomed out for now. We will be anywhere between 9.25 to 9.35% in terms of the cost of borrowing. Yields are largely stable. If you look at our yields for this quarter also, there was a 10 bips increase in the yields. So considering yields and the cost of borrowing staying stable, even the credit cost being range bound and stable at anywhere between 1.5 to 1.7, we feel that NIM guidance of 8 to 8.5% is what we are looking at, is achievable.
Okay, these numbers are achievable despite little bit of blips here and there, and 2 to 3 or 4 quarters of up move if green shoots persist. But near-term pressure on conversions, brokerages have raised that concern for your company. Do you think that's happening, or that's bottoming out, or you have mitigated that?
Near-term concerns, honestly, is only this crisis. Other than that, we feel that Q2, already we are past 1 month, so Q2 is going to be steady and strong. We don't see any near-term, other than any near-term pressure. We don't see any pressure on the early warning signals we are seeing on the portfolio quality as well. So we are watchful of the same, but we are not seeing any near-term pressure on portfolio quality or growth as of now.
Dwanil, as per my calculations, I analyzed the way you have underwriting, your asset quality is maintained, and seeing the current macro situation, does this warrant a potential credit rating upgrade? Because it seems like something might be around the corner. What do you think?
No, we are pursuing the rating agencies. So 2 years ago was when we got upgraded to AA minus, and now with the size also increasing, standalone 15,000 plus crores, consolidated 16,000 plus crores in terms of AUM, and the way that we are growing and the way the balance sheet strength is in terms of capital adequacy, very strong at 23% plus, promoter holding at 67% plus. Very unseen in our industry. So I think there are a lot of factors, a lot of food for thought for the rating agencies, and we are pursuing them very actively, that when the next rating upgrade can come in. I think once the size also crosses a certain threshold, we feel that the comfort will come in. And once we give performance like we have given for last 125 quarters, once we give another 2, 3, 4 quarters of very consistent performance, we are very confident that the rating upgrade should come in, and that should help us in raising liability very competitively as well. So we can
Yes.
tap new avenues and also get this cost of borrowing sub 9%. It will be our first target with the rating upgrade that comes in.
Yes, that's why for the viewers this was mentioned, is when you do the rating upgrade, the cost of fund or borrowing comes down, and this is like a raw material for an NBFC. Interesting. But I want to ask one more question. You are also second generation youth. I'm sure AI is very much important as well. So wanted to understand, how are you using AI in your company, or is there a use case right now here?
Yes, definitely. So there are multiple use cases going on across the organization. Majorly, where we are seeing the use of AI is cutting down on turnaround time in the way that we serve to our customers, and we are using artificial intelligence in various back-end operational processes and credit underwriting processes. So there is still human intervention in terms of credit underwriting because the nature of our customer is informal. It can't be 100% a straight through green channel process. But one thing that we highlighted also was that our employee count went down in this quarter, and that is because of last 3-4 quarters work in terms of technological upgradations and use of AI in some of our processes and dashboard managements that we have been doing, and that has led to some rationalization in the employee benefit expense as well. So we are constantly working on various models across the organization, and I think it will keep on increasing quarter on quarter as more adoption comes.
Right, Dwanil, thank you very much for taking out your time and giving the entire picture for the company, your underwriting model, and interestingly, a hope for a credit rating upgrade soon. So it's always a pleasure to have you with us, and best of luck for the future. So that's the management of Mass Financial Services. The stock hasn't done much in the last 5 years, but now will it do or not? That's the main question, and interesting story we had from the management today. So for all these, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export.
Benchmarks hover close to day's high with the Nifty 50 sustaining above 24,500 and the Sensex gaining over 650 points today, foiling oil prices and optimism around US-Iran talks. aid the market sentiment today. Oil prices fell sharply after US President Donald Trump said that the fresh talks with Iran would begin this week, raising hopes of easing geopolitical tensions and reducing the risk of supply disruptions. Muthoot Finance under sharp selling pressure today after its June quarter results. A sequential drop in profit and revenue disappointed the investors, triggering a strong negative reaction in the stock. Urban Company shares surged after its June quarter results as positive brokerage commentary and confidence in the company's long-term growth strategy overshadowed a wider quarterly loss. Zee Entertainment shares came under pressure after SEBI barred the company from the securities market for 2 months and imposed a 1-year market ban on Subhash Chandra and Puneet Goenka in the Hyderabad land pledge case. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take a quick look at the market at this particular time in midday. And when we talk about Nifty 50, well, it's inching towards 24,600 levels. What a huge recovery that we have seen, and a very sustained one at that. When we look at the benchmark indices, a large part of it has to do with the oil prices. Remember that the crude oil prices have been the biggest dampener whole year for us because of the geopolitical tension, and any bit of positive development coming in on de-escalation of the war, softening the crude oil prices, is really the impact that is really showing in the markets today. Let's see what's really contributing to the overall momentum, and it's a widespread contribution when we look at the Indian markets today, with the mid caps as well as the benchmarks being in tow when it comes to the gaining momentum and buying seen in the market. When we talk about the contribution, well, even IT is doing well, and Infosys is the biggest gainer in trade today, along with some of the big banks. And remember, banks are the quasi-investment play into the economy of the country, and therefore the crude oil prices softening are giving a direct benefit to some of our big banking names which contribute to Nifty 50, like State Bank of India, HDFC Bank also, both put together are really adding about 40 odd points to Nifty 50, which is currently gaining about 200 points. Now when we talk about the sectors at play, well, it's all across buying scene on the sectors as well. Only media, because of Zee Entertainment seeing a big downer. So that's the only one, but it's a very small portion of the market. And the banks, PSU banks, IT, FMCG, as well as financial services on the whole, and high beta metal stocks, they are the ones really pushing up the market. When we take a look at the overall momentum as well, let's also take a look at the internals when it comes to the mid-cap universe. So looking at that, on days like this, even though the markets are good, it is the punishment to the poor earnings that the market has really segregated, and therefore Muthoot Finance is on top of my list with almost 9% drop. Let's also take a look at Sun Pharma, which reported its numbers on Friday. There are a few brokerage reports which have positive call on this particular company. It's 1.5% down currently, but a lot more needs to be seen when we talk about the numbers going forward, also the guidance coming in from the company, and when we talk about the margin play. So Sun Pharma is the one that we are really looking at, and Jayashree Satagopan, who is the CFO of Sun Pharmaceutical Industries, joins in. Jayashree, always a pleasure to get chatting with you on NDTV Profit. First, let's begin with the key highlights and the factors which really impacted the first quarter in your view.
First quarter results have been demonstrating a steady performance, which has been primarily led by a strong and consistent performance by our India business, and also a consistent performance by our innovative medicines business, which is driven both in US and across our global markets. So that's been a pretty good performance during the first quarter.
Right, Jayashree, when we look at your EBITDA margins and, at 28.7% versus 21.5%, looking at the margin picture, what is it that you're really guiding for Q2? Are these numbers sustainable in the present quarter as well?
I think when you look at the gross margins, they've been comparable, actually slightly up on a year-on-year basis. On the net margin, primarily you would see that there has been an increase in our effective tax rate. Some of the incentives that we used to get and the lower tax regime that we were enjoying in India is now getting exhausted. And given that we are a global company and we have taxes in multiple other jurisdictions where the rates vary, our ETR has gone up to 27.8% during the quarter. And we expect this trend to continue until we get into Organon's complete merger acquisition. Therefore, one should factor in a slightly elevated ETR, which is the reason you would see that the net profits have been slightly lower.
Right, Jayashree, you mentioned Organon acquisition and recently that was announced. What's the progress? And now what is the visibility on which quarter the Organon investment can really start showing results on your performance?
Look, the work for Organon integration planning has been going in full steam. The regulatory approvals in the respective geographies have all been filed. And as of July 23rd, Organon shareholders have also given the approval for the transaction. So in my view, I think we are going on the right path. And as we guided earlier, we should look for the regulatory approvals all to come in by the fourth quarter of this financial year for the transaction to get completed.
That's right. In the quarter gone by, Jayashree, one spot of bother for your performance is the US generic play. It has seen a decline of 9.7%. What are the factors impacting it? And is that going to improve in this particular quarter?
The US business, if you look at overall, there are two components to it. We have our innovative medicines business, which has been showing a steady increase in terms of revenue and its performance. The two new products that have been launched, namely Lexelvi and Unloxit, has received positive, encouraging response from the prescribers. The formulary traction has been good. Patients' response has been encouraging. So the innovative medicines business continues to grow stronger. However, on the generics, we did see a decline during the quarter. Part of it is also attributed to lenalidomide, which was there in the first quarter of last year. And as you all know, that this molecule has now come down in terms of its pricing. Therefore, that's the impact that we are seeing in the current quarter. Going forward, as we all know, the US generics business continues to have challenges in terms of pricing pressure. We don't see any great change out there. However, the focus for Sun is going to be to continue to grow our innovative medicines business and also look at strengthening the portfolio in generics business.
Right. So that was about the US generics business and, of course, pricing pressure you mentioned. But specialty segment is your growth engine. It has really been contributing 22% of the sales. What is the outlook on the growth and what is the momentum going forward?
No, in the last quarter, I think the overall growth has been in the range of 12 to 13% for innovative medicines business. And good thing is both the revenues in US and the global markets have been showing good traction. For instance, Ilumya has been commercialized in several global geographies, including emerging markets, and we are seeing a very good traction out there. And the focus for Sun, obviously, is to see how we continue the momentum and also build on Unloxit and Lexelvi's sales in the US.
Right. So specialty, a growth engine and seeing more growth there. But the overall Q2, key factors of growth as you see, and give us a guidance on this particular quarterly performance on an overall basis, Jayashree.
We are not giving quarter-wise revenue guidelines, but what you could perhaps look at is the overall guideline that we have given for the year, which is in the high single digit. I think that's something we should definitely be looking at for the year.
Right. Jayashree, looking at the different geographies, you mentioned about the US generic pricing pressure. Emerging market is healthy at 4.2% YOY growth. What is the geographical expansion, as well as which geographies are going to show growth in this quarter and the rest of the financial year?
Look, our focus has been equally on all the 4 geographies that we have today our teams categorized. India obviously has been growing pretty well. Over the last couple of years, we have seen a sustained growth of about 14%. This quarter, we have grown at 16%, which is higher than the market growth. That is the focus for India, and we'll continue to remain sharply focused there. I have already covered on US the priorities and the strategies for us to work in the US market. When it comes to emerging markets and rest of the world, in the last quarter, we did see some of these war-related issues as well as a global scenario, which is bit way down on the business. But we think over a period in time, this should also normalize, stabilize, and we should start seeing growth in these markets.
Right. There are other aspects also and more global in nature, Jayashree. So US tariff is being talked about somewhere in the horizon. But what about the immediate concerns about supply chain, transportation costs going up? Any important aspects which erode into your margin, if you can give us a guidance, and any constraint due to the war on your business?
I wouldn't think that there has been any supply chain related constraints, so I wouldn't be worried about it. However, as the markets tend to normalize in the coming quarters, one should also look at the approvals that we have got for the new product semaglutide, both in South Africa as well as in Brazil. These could be opportunities that we could possibly capitalize. In South Africa, it's our own launch, whereas in Brazil, we will be outlicensing this to our partners. And we think this could be a good opportunity for emerging markets in this year.
Right. Also, Africa is what you mentioned in terms of geographies. But Jayashree, GLP-1 opportunity is big for Indian pharma. Semaglutide manufacturing concerns were seen a few days back in the industry. How would you allay any such concerns when it comes to Sun Pharma's pitch in taking opportunity in GLP-1?
So look, we do have a strong quality management system, and both the APIs and formulation for semaglutide is manufactured by Sun. And we do have tie-ups with our global agencies and suppliers who give us the devices. So at this point in time, I do not foresee any issues that could come up in terms of supply chain disruptions or quality related. So we will have to continue to focus on the strong quality management and compliance systems to ensure that we are able to service the market without any interruptions.
All right, slight improvement in the stock of Sun Pharma, but still over 1% down. Jayashree, always a pleasure to get chatting with you. All the best for the present quarter. All right, let's move on to another important set of numbers, a stellar Q1 for PNGS Reva, as the company really saw a second consecutive quarter of delivering over 100% revenue growth. And we have with us Amit Modak, the whole-time director as well as CEO of PNGS Reva Diamond Jewelry, joining us now. Amit, always a pleasure to welcome you on NDTV Profit. Good set of numbers. Now, my first question to you would be, 2 straight quarters of 100% revenue growth. Now you have, increased the expectations of the market and the stakeholders. First, tell me, is the same momentum going to continue in the present quarter?
Yes, we will definitely try, but nothing like business or the market work on the equations. So we will definitely try to maintain the momentum. And there is a really good shift towards the studded jewelry from the plain gold jewelry, as it is our government also want to have lesser consumption of the gold while having a luxury in the jewelry. So this studded jewelry serve that purpose because studded jewelry contains lesser gold as compared to the plain gold jewelry for the same size of the ornament. And that might be inclining the customers to prefer to the studded jewelry or the real diamond or the natural diamond jewelry.
That's right. Amit, this is an important factor that you mentioned. Of course, lightweight jewelry in gold as the prices have increased. That's an important bit for this entire sector, which is gaining momentum. When we talk about your numbers, you did say emphatically that 100% revenue growth is possible. What are the factors? We are already 1 month down in this particular quarter. What are the factors which could lead to the growth? What are the key growth drivers? And also adding, will the EBITDA margin momentum really continue as you expand further in your sales?
See, EBO expansion will definitely put some pressure on the EBITDA because there will be higher that particular location marketing expenses, then fixed cost will be there to those EBOs. And at initial stage, those EBOs will be trying to become a BEP level capable. And that takes at least 12 to 15 months time to become capable. During that period, whatever cost we will incur, that may put some pressure on the EBITDA because our employees cost, fixed cost or the rental fixed cost, this will go up, but there will be lesser contribution as compared to this current normal business. And so 150 to 200 basis point pressure might be there on the EBITDA as well as PAT margins.
Right. Can you specify the number and the guidance, Amit, in terms of what are the kind of EBITDA margins that you'll be comfortable maintaining for this financial year?
We can maintain very easily around 25%, but as I said, it will pressurize 150 to 200 basis point. On that basis, it will be somewhere around 27%. I always think about with the conservative thing. That's why I'm saying it may go max to max down at the 25%.
Right. When we talk about your expansion plan for the entire year, what would you like to end this particular financial year with? You already said 25 to 27% range of EBITDA margin you can really maintain. What is the expansion plan in terms of the revenue since you have already shown 2 quarters of substantial growth?
So again, I'm repeating, equation doesn't work in the market, neither in the performance nor in the
give us the practical, feasible targets that you have for the year.
Practical growth rate can be between, as an industry as such, right now industry is showing around 30 to 40% growth in the established market or the settled market. We are going to add EBOs. So EBO addition will definitely contribute to the top line, but it will not in the first current 12 to 15 months time, because in this current 12 to 15 months time, there will be expansion of the EBOs, which will start contribute sizably after 12 months time, because first 8 to 12 months, it will take initial period, gestation period kind of the thing to establish the business and to meaningfully contribute to the top line. So on the whole as such, if we want to consider what could be the contribution at the top line level, it can be on the average basis somewhere 60 to 75% we can expect.
All right, so that's the guidance you're doing. But Amit, looking at your sector, it is seasonal in nature as well, and we are right in the beginning of a long this time festive period. So give us a sense on the demand, the festive season, as well as what are you expecting on the ground over there?
First quarter there was Akshaya Tritiya, which we clocked as compared to previous year almost 2.75 times. So that was giving us confidence, and subsequently there was a monsoon sale, discount sale, and that also contributed substantially to the top line. This second quarter is comparatively lull because there is a Ganesh Utsav, then Shravan Mas is there, so Raksha Bandhan is there. But during that period, affordable or the lower ticket size jewelry more gets sold. Main season will come in the Q3 and Q4, where little bit higher ticket size ornaments get sold, mainly in the Q3. Again, Q4, it's a lightweight or the lighter size or the smaller size ticket size, because New Year or the Valentine Day, those are the festival which are getting celebrated as an event, not as a festival, but as an event. So main festival is a Q3 festival, which is a Navratri, Dasra, Diwali. And subsequent to that, a lighter festival at the fag end of the year, that is a year end, and the New Year's welcoming, that is the first week of the January. It is always there, but shopping happens generally in the last week of December. So Q1 has done very well. Q2 will do in the line, but not as Q1 or something. But Q3, Q4 will definitely clock very well. And as a whole year, we can expect the top line to be in the range of 60 to 75% plus.
All right, 60 to 75% plus top line growth. But Amit, just a quick word on your store expansions. Even though you are in 25 cities, you're expanding more stores, but it's concentrated to 3 states. What's your plan there?
See, basically making money is the business. And so from wherever I am getting more and more money, I concentrate that area first and simultaneously other areas, because other areas are taking away the profits or the amount of the earnings for their expansion or the making them viable. So North India is the area where we are expecting to expand, and total 15 EBOs we have planned. Out of that, 2 already established, 1 was established prior to the IPO. So 3 EBOs are there. 2 to 3 EBOs will be coming by end of September or first week of October, that is before festival.
Right.
So it will get catch with the festival.
Right.
And another 4 to 5 EBOs will come in the November, December and Q1 of the FY20.
Sure. Amit Modak, always a pleasure chat with you. All the best with all your efforts on the company. The stock of the company is just about 40 odd points away from its 52-week high levels. Good performance there. Moving on, Venkatesh Balasubramaniam, who's the MD and Head of Research at JM Financial Institutional Securities, joins in now. Venkatesh, always a pleasure to welcome you on NDTV Profit. My first question, of course, the momentum in the market is totally these days based on the crude realities. What is your short-term to medium-term view on the market momentum? And as we, after monsoon, get into the festive season, what's the outlook in-house?
See, I think the turn has come over the weekend. I think Trump, along with their Middle East allies, have taken a call that they will not be doing any fresh strikes. And what that has done is that has caused crude oil prices to come off in a very sharp fashion. I think that is why the market is on the positive side. The only problem with this is that with everything that Trump decides, it can change within a day or within a week. So
I was asking Venkatesh that the Trump flip-flop is something we have been dealing with when it came to the tariff also whole of last year. Now this year it has been the war situation. So keeping that aside, with earnings, with the monsoon-led impact, the demand on the ground and moving towards the festive season now, how do you sum up the overall market view?
See, overall, I would say that look at it this way. For the current year, I think Nifty, everybody is expecting 15 to 16% kind of EPS growth. That is unlikely to pan out. I think what we believe is possible is maybe around 8 to 9% kind of EPS growth for the full year, which basically means that the market is trading at around financial year 27, is trading at around 21 times or 22 times FY27, which is slightly on the expensive side because the historical average is close to 17 to 18 times. Now, it is not like the market is extremely cheap. And it is not like growth is extremely robust that the market is going to run away. Our own house call is, I don't think the market is going anywhere. I think it remains at this 24 to 25,000 kind of levels for the Nifty for the next 6 to 9 months is our view. If things start improving next year, at that point in time, maybe we get more constructive.
Right.
We don't think there's significant downside to the market. We don't think there is significant upside also. The market
All right.
remains range bound at this level.
All right, range bound at this level, richly valued already at these levels is what your call is. Venkatesh, very quickly, the themes and sectors at play which really make value for a medium to long-term, investments at the current level and at the current stage, according to you.
Okay, so the sectors that we are overweight are basically NBFCs. I think so far the quarterly results also proving that. I think NBFC results, profits are up almost 25 to 30%. So we are very positive on NBFCs. We remain positive on some of the consumer names. We are also positive on internet as a theme. This is something which we like. We like the industrials, infrastructure and defense pack. We also like pharma and healthcare, despite the fact that there is the looming clouds of tariffs in the US. But what we are playing in pharma and healthcare is actually not generic pharma. What we are playing is basically the hospitals like Apollo, Fortis. We also like somebody like Dr. Lal's Path Labs. We also like Divi's. So we are staying away from generic pharma, but we like everything other than generic pharma, like hospitals and diagnostics.
All right, healthcare is something you're interested in, minus the pharma space only. Venkatesh Balasubramaniam, it was a pleasure getting all your expert take on the markets. We could chat sometime later, out of time completely, on this edition of Markets at 12. Thank you so much for joining us, and keep it with NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है, बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio. With me, Hiral Datia and Sharad Dubey, who's standing at the Profit Market Pit with all the action in the market today. Sharad, you know, we've been talking about what's happening in the markets with the kind of scale that we've been able to achieve today as well. The question is of sustainability, and a lot of market experts are of the opinion right now that there is going to be a lot of action when you talk about the broader markets, that's the mid space, and potentially some bit of consolidation that could be coming in terms of the benchmarks as well. And you have that momentum which is picking up on the financial side.
Well, that's right, Hiral, and of course, remember on Wednesday, RBI MPC meet comes in. If it's the status quo, we can see the interest rate sensitive stocks doing well, and market is factoring in a lot of positive factors. We are near the day's high level, Nifty up almost 200 points, and let's get the Nifty Banks chart up. The story remains the same. A good technical start coming for both the benchmark indices going ahead. But Hiral, the good news is we're talking about the small cap and mid caps. Value buying is back here after a long time. Let's just get in those key factors also of how things are moving and what you should be actually going ahead with. Of course, look at that small cap, that's up almost 1.5%. The technical momentum is strong and the breadth is also strong, the advanced decline ratios which I'm talking about. But let's look at the key resistance levels also, where Hiral there might be a consolidation or a question might come in. For Nifty it's 24,700 to 24,900, that's the range I've given. Nifty Bank, let's pull up the resistance range for that as well, and to show you that comes in at 58,000 to 59,000. But let's look at the other key triggers also. This is what I'm talking about, value buying coming in SMIDs, and of course the earning reaction is there. We are in the middle of the earnings, and largely we are seeing the earnings are in line too strong. Buying is back in the IT and PSU banking space after the, you could say, profit booking which we saw last week, a little bit of it, but then the technical strength is there. Only Z is dragging the entire Nifty Media Index. That's why I've got this. Of course, some concerns coming on the promoters and company getting debarred by SEBI. Rupee has strengthened, that's the trend. Yields are cooling off. Crude has fallen on the global cues, and the RBI MPC meet kickstarts today. So we'll be, of course, tracking the interest rate sensitive stocks much more, and of course the earnings as well. And speaking of earnings, we have DLF, Escorts, Kubota and UPL, and we'll be tracking them and their reactions and their con calls as well. So this is how the market is panning out right now. But yes, there is a good value buying in SMIDs and the benchmark indices.
Okay, so good value buying is what Sharad is actually alluding to right now as we speak. But up next, actually, let's look at the rapid fire as well. And to discuss more in terms of the stocks, we have Nilesh Jain who's joining in. Nilesh, let's start off with the Bajaj twins. Strong first quarter that has been reported. Both the stocks are, in fact, the top gainers as well in terms of Nifty 50. What are charts indicating for you? Because right now markets are at the day's highs. But let's just talk about the Bajaj twins.
Very good afternoon to you, Hiral. Well, both the Bajaj twins are looking strong on the chart, and Bajaj Finance specifically, this counter today after a fresh up move looks like it is heading towards 1170, 1190 on the upside. And with a stop loss below 1100, yes, it can be considered going long. And apart from that, if you see Bajaj Finserv, another fresh breakout in this particular counter as well. So this particular stock is also looking strong for 2150, 2180 kind of level on the upside. So keeping a stop loss below 2000, Bajaj Finserv is also a buy.
Okay. Jindal Worldwide, they're considering a fundraising. The volume's also pretty high. That stock is up almost 9.5%.
Yes, a very strong move that we have seen recently in this particular stock as well. So looks strong for 44, 45 kind of levels on the upside, but not advisable to take a fresh entry since we have already seen a spurt of close to 10%. Buy and decline should be the strategy, keeping a stop loss below 38. Looks strong on the chart for 44 to 45.
Okay, so 40 to 45 is what you're looking at. What about our ITC? You have Nomura and Jefferies, which has upgraded ITC. Overall, the earnings have been slightly weak, but 2.5% up move coming in there. Are charts indicating further momentum on an ITC?
Well, pretty slow mover, and recently we did saw some bit of base formation happening. A kind of a triple bottom is also shaping up. We need a decisive breakout about 295 to call it as a short-term bottom formation, and then probably we can expect a move towards 310 to 320 as well. So risk and reward looks favorable. Keeping that in mind, one can go long, keeping a stop loss below 280. We can expect a pullback towards 295 to 300.
Okay, what about Ashok Leyland? I know the auto pack has been buzzing, but July sales have been very robust for this counter. 4.5-5% up move. Further momentum there?
Absolutely, a very strong breakout in Ashok Leyland from a triangle pattern, and a follow-up move towards 180 to 185 one can expect in the near term. So keeping a stop loss near about today's low, that's 169, one can go long in this particular stock as well.
Ratnavir Pine Labs, strong volumes on these two counters. Nilesh, what would you do?
Yeah, you mentioned, right?
Ratnavir and Pine Labs.
Right. So Pine Lab, this particular counter is giving a strong rebound from the lower level. So we can expect a move towards 160 to 165. But not advisable to take a fresh entry after 8% spurt. Keeping a stop loss below 140, it can be bought on declines. Now coming to Ratnavir, a very strong chart pattern in Ratnavir. We can see a good bottom formation, a rounding bottom is forming in this particular stock. Today is already a 14%, but yes, there is still room on the upside towards 215 to 220. So keeping a stop loss below 195, one can go long on declines. The broader structure looks strong.
Last, Ugro Capital, highest ever monthly disbursements is what Ugro has seen. Nilesh, on the charts as well, because financials have been picking up right now, would you advise to buy a Ugro Capital, or would you say book profits?
It was to 106. From that level, it has witnessed some bit of profit taking. So ideally, one should wait for a move towards 105 to 110. That can be a good reach where one can look for booking profit. The setup looks strong after today's price and volume breakout. If it closes above 99, that will be a positive close for this particular counter. Keeping a stop loss below 94, one can go long for a pullback move towards 104 to 106.
Right, so that's the view coming in for the rapid fire round. But moving on, now let's talk about the earnings. We are joined in by the management of Sri Lotus Developers, and of course the numbers we are looking at, of course a decent set of numbers coming in the pre-collections, and the numbers looking pretty awesome. Just wanted to get you in here, Pandit sir. Hi, it's always a pleasure to have you with us. How is the overall collections looking like right now going ahead?
First of all, thank you for having me on your show. Yes, you can see our numbers. Numbers are very encouraging. Recently, we launched our collection, which was luxury coastline collection, and we have got a tremendous response on that. You can see our pre-sales as year on year, almost 560%. It has gone up. Collection also has gone up by 115% year on year, and revenue also has gone up upwards of 100%. EBITDA also has gone up 63%, and net profit also has gone up by 77%. So getting good momentum, good numbers.
Anand, good afternoon. This is Hiral on this side. Now, with the performance that we've seen in terms of the first quarter of FY27, does this actually give you the confidence in terms of that 55 to 60% growth in both revenue and profitability that you've guided for in FY27? Or do you think you'll be able to even surpass that kind of a number? Because profits have surged 77% this time around. Revenues also pretty strong, kind of doubled. So that seems to be slightly in line, but profitability is going to be the key then.
We are very, very confident. Since we are supposed to launch at 4 another projects, and even right now we have got good fillers for those projects, and we are very, very confident that whatever guidance we have given for annual will be definitely meeting, if I don't say surpassing, but at least we'll be meeting those guidance easily.
Okay. And what is going to drive the growth, Anand? Is it going to be new product launches, execution of current projects that are already in the pipeline, or faster revenue recognition when it comes to ongoing developments?
So all three, I would say. It's a combination of all three.
Okay.
We have already ongoing about 8 projects, getting very good response on that. 4 projects will be launching those 4 projects. Those also we are getting very good fillers from the market, and also revenue recognition. So I think this sales momentum is extremely good in all these projects because those are all strategically located projects, and our execution capability is extremely well. We generally complete all our projects around plus or minus 3 years, 3.5 years. So I'm sure all the combination of these 3 will get us good numbers.
And Anand sir, a lot of launches recently has come in from your company across the coast. I know we had seen across, be it from Malabar Hills till Juhu. Wanted to understand, are you looking anything at the interiors or any redevelopment projects as well as other developers in Mumbai metropolitan region?
In fact, we have majority, all projects are redevelopment only. And that is why you can see that we are a debt-free, completely debt-free, technically debt-free company. And all these projects are either joint development projects, except barring one project, which is our Greenfield project, but otherwise all projects are redevelopment or JDA projects. And all these projects are right now, majority projects we are taking with our theory called B and G theory, blue and green theory, where from those projects we can see blue means ocean or water and green means a garden. So that yields better per square feet revenue for us.
And Anand sir, a lot of other, you could say non-MMR players are also coming to this Mumbai region. Is there a competition heating up, or do you think this market is there for all, the pie is big?
I think both, I would say. The market is so big. So everyone has got their own pie. That's one. Second, I understand that real estate business is a very, very localized business because you need to understand the requirement of local people, local your channel partners, kind of design, kind of sales strategy, kind of approvals, all these things and ground reality. So it takes time for any company to understand local situation. So yes, there would be some competition, but I think they are more, all these companies which has come from, I would say, out of Mumbai, they are more in a premium segment. No one has launched anything which is ultra luxury.
Fair enough. Interesting point, and of course, debatable also which is luxury, which is not. Mumbai is a very expensive place. But thanks a lot, Anand sir, for taking out your time, giving your views on the company and the industry as a whole. Nilesh, let's do a quick chart check on Sri Lotus Developers. Stock is in the positive, not major reaction because of the earnings, but nevertheless, is there any trade to be made, or do you think this is a consolidation candidate?
Sharad, we have already seen a very strong run-up recently in the July month. So far, it has risen almost 35%. And today, we are witnessing some bit of profit taking from the highs. So not advisable to chase the momentum. There could be possibility that we may see some bit of consolidation before we see another leg on the upside. So avoid taking any fresh entry at current level. Just in case if you get any dip towards 190, 185, that can be a good entry point.
Sri Lotus, interesting one to watch out for. Quick view in terms of ABB, Nilesh?
ABB, a very good breakout. We are witnessing today a strong trend reversal, I would say, with a good volume attraction. So quite possible we may see a follow-up move towards 7,700 to 7,800 on the upside. So keeping a stop loss below 7,300 can be bought on dips.
Be bought on dips as well. That's the view coming in. But let's get in the management as well to talk to us about what's happening with the quarter and what's the outlook going ahead. Sanjeev Sharma, MD and Country Head, and TK Sridhar, CFO, ABB, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Sridhar, let me start with you. First quarter characterized by strong revenue growth, robust order inflows, and a healthy backlog. But investors are closely watching the margin trends and execution of the large order book as well. What cues are you picking up then in terms of FY27 from this first quarter gone by?
I think today we see, as you was rightly mentioning, so we have a strong order inflows. We have a good revenue growth backed up by the strong order book what we have. And this was all possible because of our presence in the 23 market segments via our 16 business divisions as what we are present. So I think going forward, the growth is going to be definitely be exciting for us when we're looking at what is happening in the emerging sectors like data centers, electronics and renewables, and energy transition and the energy efficiency topics as what we are dealing with. So I think this is something which we will try to keep catering to going forward. And if you look at it, so our 90% of the business comes from India, and which are divided into three verticals, which is emerging sectors, the core sectors, and also the infra and transportation. So I think that all these segments will play out in a way that is able to help us to get to this double-digit growth quarter on quarter. So this is what we see at this point of time. So, and when we go down to the margins, I think margins is something which is a play of what we produce and how we are able to manage the value chain impacts and how we pass it on to the customers as well. So I think this is going to be a bit cyclical because these factors are something which are not in our control. So I think the only option is to help and to keep mitigating these topics as we go forward, and we remain resilient to cater to our customers in a more predictable and a smooth manner.
Okay, so that's what we could be watching out for. But what are the reasons for the margin pressure? And do you think it's going to be easy a task, or is it even going to be possible for ABB India's historical margin profile to come through in FY27 at any given point in time?
So I think I will not be able to do any forecasting at this point of time. I think the major impact came to us from the known topics of commodity exposures, what we have, because they have been sort of strengthening and hardening over a period of time as we see. And of course, the forex volatilities, because we remain a net importer at this point of time, and therefore we have to wade through these topics as we go. So I think our job today is to make sure that we're able to keep the momentum, keep our order books intact, and pass through this particular phase. So I think for the next 2 to 3 quarters is what I see. It will be more volume-led growth rather than a margin-led growth. And this is something which we will keep watching as the events develop.
Okay, so that's with regards to where ABB goes. Now, Sanjeev, you've highlighted that there is strong traction from data centers in the past as well. How large is this opportunity becoming for ABB India? And can data centers actually emerge as a meaningful contributor to growth, say, over the next 2 to 3 years?
We have been talking to you for a very long period of time. I think we started talking about data centers 2017 onwards, and we saw this opportunity early, and we positioned ourselves, and we are taking fruits of it as the market scales up. So we have created quite a large capacity in the market. We have supported our customers to create large capacity, and we have a very good goodwill with our customers for the future capacity. So to your question, we see a very strong pipeline ahead of us. I think it's only at the early stages of data center build in terms of capacity India will require, both for the basic data center infrastructure and also the AI play that will also be captured in the data center space. So we have already placed our capacities, we have increased those, and also our capabilities to cater to the demand that is available now and also for the future demand.
Okay, so that's with regards to where the data center outlook goes. But what is that order backlog looking like, which is executionable, and what is that timeline when you talk about executions?
Specifically for data center, I think it's a fast cycle project. So we cater to them, from order to delivery. They are quite demanding in terms of how soon the delivery should be made. So that's pretty quick. But for the larger portfolio, Sridhar, you may like to comment.
So I think we have a strong order book of $11.5 billion. I add 5 billion rupees, 7,500 crores roughly. But I think this 40% of that is expected to be converted in the next 2 quarters to come, and we are confident that this will happen. And the balance is something which will get over in the next afterwards, the next 4 to 6 quarters. So technically speaking, this order backlog will get executed over the next 8 quarters.
Okay, so that's the order backlog execution. What about the next, say, 5 years? What would drive growth? Electrification, automation, railways, energy transition, or data centers?
I think the top will be electrification, because everything is going electrification, and our core of our portfolio with electrification division is of course electrification, electrical products and systems. Even in our motion, everything is electrification, but towards energy efficiency. And in automation also, when we do automate the large industrial plants, bulk of it is electrification and automation layering on top of it. So it is electrification as a theme, combining with energy efficiency and the automating for higher productivity.
Okay. If you have to look at the businesses that will actually see higher contribution than from what you're just mentioning, Sridhar, what will see a larger play out? Which segments will drive growth where the contribution will then increase?
I think that's what Sanjeev was alluding to in his earlier conversation. I think data centers and renewables will be those key sectors which will definitely, has a faster potential to grow, right? So, and that's comes from the theme of electrification being then most important criteria for us. So I think those are two sectors which we are closely watching for, followed by electronics as another area which will actually fuel the growth going forward.
And the other segment that we see, which are also finding good traction, is commercial buildings and grid modernization. I think that's where we are seeing quite a strong growth. In terms of numbers, it's as strong as or even stronger than data centers. And then together with renewables, battery energy storage systems, I think that's another area which is developing alongside renewables. And to add to it, residential buildings, they're slightly muted, but they are still a high contribution to our orders. And railway and metro is a kind of a steady business for us going forward.
Okay. And, what are the key variables, according to you, that one should be watching out for then over the next 12 to 18 months, taking into consideration that margins are becoming very crucial right now?
We have gone through many cycles like this. I think one was post-COVID. And I think if you go back to our interviews around that time, we had similar discussions as well. So what happens is that as a company, our value system is to commit to the customers and deliver what we have committed. But that's what we focus on. So in the short run, what happens is whatever cost is captured and whatever variable comes, as per the contracts, we take it and we deliver to our commitments. But we are operating in very mature segments and also with very mature customers. So as the input cost increases and that variability settles down, there is a normalization of the prices in the market and the cost gets passed on. I think that's what will happen this time as well. As we saw post-COVID, when the supply chains were disturbed, you don't have a finger on what is the level to pass on to the market because the volatility is very high. But then when the volatility subsides, the normalization of the price takes place in the marketplace. So we see that happening this time around as well. It's just a matter of time.
Just a matter of time. We'll wait and watch. But thank you, Sridhar. Thank you, Sanjeev, so much for joining in. It's always a pleasure to speak to both of you as well. The stock has come off slightly from the day's highest levels as we speak. But moving on to an exclusive source-based story, my colleague Shrimi is picking up that the finance minister is likely to move tax and other amendment bills in the Lok Sabha. Shrimi joins us with all the details on the phone line. Shrimi, good afternoon. What are you picking up from your sources right now? Because this is going to be interesting, and this is a bill that will actually replace the income tax amendment ordinance as well.
Yeah, that's right, Hiral. Actually, you could expect a lot of other amendments as well, because one is, of course, the taxation and taxation bill, which we have seen in the form of ordinance, which was promulgated earlier this year. Now, the ordinance had provided exemption from tax for foreign investor on interest income, capital gains arising from the GSEC. Now, that was announced as a part of ordinance, and now they are moving it to, shift it or to make it a bill in the ongoing monsoon session. So that's one part of it. The second important part, which is very crucial from some of the stocks as well, here, is payment and settlement system. Now, do remember there are a lot of talks and chatter around levy of merchant discount, fees on a lot of these payment companies, and they have been doing a lot of lobby around it. So we could expect some proposals, some changes in Payment and Settlement System Act, where to strengthen the digital payment ecosystem. We don't know the exact details, but what we are gathering at this point, that certain charges on center notified digital payments mode potentially could get released to user and payment participant is the indication we are getting at this point. In fact, you could see some major changes in the electronics manufacturing, the contract manufacturing as well. Now remember, the budget 2026 in February has made a provision for contract manufacturing, giving relief to foreign investor who wants to, supply capital goods, etc., to Indian companies, Indian manufacturer, and that's given the tax exemption to 5 years, which is 2030-31. Now, this bill, which, the finance minister will move, could extend beyond the 5 years and could go up to 10 years is the indication we are getting. So, again, big boost for foreign investors. In fact, we are also learning that there could be some tax relaxation for leased data centers, and we know that how government has been focusing on the data centers. So that could also be the part of the other amendments which finance minister is moving, and you could perhaps see a lot of changes in terms of boosting foreign investors as well as to deal with the ongoing West Asia crisis is the indication we are getting, and the bill will be moved either today or tomorrow, is what we are learning.
Okay, that's interesting to pick up, because tax incentives for FIs, data centers, a whole host of stocks that could be in focus as well. But this is an interesting development story, Shrimi. We will come back to you as well and get further updates. But completely out of time, ladies and gentlemen. It's time for a quick break, and thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side from the NDTV Profit Suzlon studio. We'll be right back. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is...
Benchmarks hover near day's high, with the Nifty 50 sustaining above 24,550 and the Sensex gaining over 600 points as well. Falling oil prices and optimism around US-Iran talks aid market sentiment. Oil prices, meanwhile, fell sharply after US President Trump says fresh talks with Iran would begin this week, raising hopes of easing geopolitical tensions and reducing the risk of supply disruptions. Muthoot Finance under sharp selling pressure after its June quarter results. A sequential drop in profit and revenue disappoints investors, triggering a strong negative reaction in the counter. Meanwhile, Urban Company shares surged after its June quarter results as positive brokerage commentary and confidence in the company's long-term growth strategy overshadows a wider quarterly loss. Zee Entertainment shares came under pressure after SEBI barred the company from the securities market for 2 months and imposed a 1-year market ban on Subhash Chandra and Puneet Goenka in the Hyderabad land pledge case. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that's going to get you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets, and it's actually healthy gains coming in, whether you talk about Nifty 50 or Sensex. So looking at close to a 200-point uptick when you talk about Nifty 50, well above those 24,500 levels as well. When you talk about Sensex, 600-odd point gain coming in there as well. And when you talk about the small cap or mid cap indices, slight bit of outperformance that you're seeing coming in for some of those indices, as you can see on your screens as well. So good shape coming in for broader markets as well. But when you talk about the sectoral picture, it's very, very sharply tilted in the favor of green right now. And it's actually IT that's leading the gains, as you can see on your screens. PSU banks in great shape also, FMCG, metals, financial services, India Defence, rural and auto and bank. All of those sectors in great shape right now. And media is the only sectoral laggard, so that should tell you about the kind of market picture that we have at hand right now. When you talk about some of the stocks that are gaining from within the Nifty 50, it's actually something like an Interglobe Aviation's up about 4-odd%, Shriram Finance, some of your IT counters also, some healthy gains coming in there, 3% uptick for something like an Infosys, TCS also in great shape right now, and Axis Bank, as well as some of your other financial counters, likes of SBI, SBI Life, also holding on to some bit of gains as well. When you talk about the list of top losers from within the Nifty 50, is actually a Sun Pharma under pressure after its results. US Generics seems to have been a little bit of a disappointment, and that's something that you're looking at. In terms of the outlook, the management does pencil in some recovery, so let's see whether the stock also recovers. You do have something like a Bharti Airtel, Apollo Hospital, ONGC, Tech Mahindra and Maruti Suzuki. Some of those counters also on a little bit of a back foot right now. What's doing quite well for itself from within the broader complex is something like an Urban Company with that 13% odd gain also coming in on the back of its numbers, after its numbers as well. Something like a Blue Dart also in good shape. So some of your earnings reactions really reflecting through. But let's also get chatting in terms of Brent as well and get you the outlook coming in for oil prices. In fact, Vandana Bharti, head of commodity research, SMC Group, joins us on the show right now. Vandana, very good afternoon. Can't say the same about oil prices right now, and there's actually a lot to talk about, be it metals, because some of your metals, you do have some of those milestones really coming through for something like a zinc, iron ore, and gold for that matter, a little bit of a tepid movement that you've seen. But first, let's talk about oil prices. Seems to be that the geopolitical risk premium is easing off right now, given the peace optimism.
Hi, Shanshi. I was just looking at the chart of heating oil, and it is showing a concern in the market because the NYMEX crude, it is moving down, and I've just done the comparison between the two. NYMEX crude from the top, it is down by more than 36%, but when we consider the heating oil, which is of the commercial use and showing the real indication of the market, it is only down by 13% or 14%, say 14%. So yes, the concern is still there in the market despite the 38-39% fall in the prices, and that's why the other asset classes, they are not reacting in the same way oil prices is moving down, be it Nifty, be it gold or silver. So yes, the real concern is the diesel prices, heating oil prices, distillate prices. We can say that the refined products prices are not well down by the as compared to the crude oil prices.
No, absolutely, and Vandana, point taken there, those are definitely concerns. But, in terms of the market, we're taking a little bit of a breather given that crude seems to be easing off right now, right? So what are the kind of levels that you're looking at, both on the bottom of the barrel, the downside as well, and given if there is an escalation of sorts, or any sort of commentary, important one coming in from the US president, what are you penciling in on the upside and the downside when it comes to prices?
Yeah, the next downside for NYMEX crude, it is definitely it is of $72 to $74 kind of level. But yes, the upside is now it is on the lower side, and it is $82 to $84 again. And if we talk about in terms of MCX prices, it should be in the range of 7,100 to 8,400. So the range will be wide, and the fresh P stock, it has shown some kind of positive movements in the prices, and that's why we have seen fall in dollar index and a little bit of fresh buying in metals complex as well.
No, absolutely, and we'll just talk about that in just a bit, right, Vandana? But before that, just very quickly, a word on OPEC Plus in terms of the supply increases. Do you think that they're weighing on the outlook a tad bit as well?
Yeah, at the same time, the statement of OPEC, it is giving some kind of pressure on the crude oil prices, and because of that, collectively, the fresh P stock, OPEC supply increase and all, that all are putting pressure on the crude oil prices, and that's why prices are moving up. And meanwhile, we have got some good data, PMI data, better PMI data. Despite that, we haven't seen any kind of rise in the crude oil prices. So definitely, that is giving a pressure.
Absolutely, and let's talk about what's sparkling in an otherwise, tepid commodities complex as well. You do have gold prices that are well above those $4,100 levels as well, Vandana. What do you think about the kind of factors that you're really watching out for? Of course, a weaker dollar seems to be helping here, but what else are you looking at? And more importantly, what kind of levels are you then thinking gold is going to be able to sustain?
Some of the triggers are very positive. We have seen a very good OTC buying in second half of 2026, and it saved the fall in ETF outflows. And like major banks, hedge funds, they are backed into this counter. And because of that, we haven't seen that despite many bearish pressure or technical formation, gold somehow saved the level of $4,000 till now, and silver, it has saved the level of $55 till now. So we are expecting a upside move in gold prices, and again 3950 and 4000 kind of level is a very good support for this commodity. But yes, at the same time, bond yield, it is higher, and it is working as a higher interest rate this time. So because of that, even the upside is kept near the level of $4,300, and same in silver, it should be of $64 kind of level resistance in silver. So yes, both of the market, they are saving the downside, but yes, gradually they are moving upside.
No, absolutely, Vandana, and we've seen the prices also do that bit of talking and demonstrate just the trend that you've pointed out as well. So right now, do you think that fresh buys people should be staying away from, given that there seems to be a little bit of a perk up in demand for gold?
Yeah, in fact, even we have seen a positive buying, a very marginal positive buying in ETF, and because of that, the traditional buying season has started. So from a bit jewelry, ETF or OTC buying, some buying has emerged, and it is we can say that onset of this physical demand and ETF demand. This will carry out the rally in gold prices.
No, absolutely, and let's see how that really pans out, right? It's quite interesting, the kind of setup that gold's got right now, even in the domestic market and the global one at that. But speaking of global, Vandana, let's talk iron ore right now. The price has hit about a 1-year price low. You're looking at Singapore futures sliding below that $95 level as well. What are you looking at by the way of prices and factors, of course?
If we consider iron ore, we just look towards China, because it is a major consumer of this iron ore, around 50%. And the chart is really scary if we consider the SGF iron ore futures. The thing is that the real estate sector of China, it is giving a very gloomy picture for this iron ore. And we can say that there are huge pile of inventory in China, and the steel production, it is really down. The demand of steel is really down in China, and 95% of the consumption, it is going in the sector. So the steel sector is moving down, and it has very low demand in China. And real estate sector, it is not out of the woods still. In fact, some green shoots we have seen, but yes, there should be some kind of lower recovery in iron prices.
Absolutely, Vandana, and we'll pencil that in as well. Couple of things here: China demand as well as the steel market that you're looking at very closely. Lastly, just before we let you go, a quick word coming in on zinc as well. You've seen some strength really come in. Prices very close to those 4-year levels as well in terms of the highs. What are you looking at by the way of factors, prices, anything to talk about when it comes to zinc?
It is the supply disruption from Glencore. It is more than 21%, and there could be an annual deficit of around 19,000 tons in 2026. And after this crisis, the demand of zinc is on higher side because of the renewable energy demand, and because of that, we are witnessing a level of that we have seen in 2022. Now we are expecting a 410 kind of level on MCX.
Absolutely, and thank you so much, Vandana, for taking out time and joining us this afternoon. So not only is there a supply disruption, not only is that a concern, and prices close to a 4-year high when you talk about zinc, it could very well continue, and that's the word coming in there. When it comes to gold, fresh buys are something that you should hold off on right now, given the kind of setup, and those were some of the things that we've talked about. But let's move on and talk about CleanMax Enviro's first quarter numbers as well, powered by that strong execution really reflecting through and a sharp jump when it comes to the renewable capacity. Now the company has more than doubled the revenue, returned to profit, staying confident on its FY28 earnings target as well. We caught up with the management of the company in terms of the road ahead and the growing AI and data center opportunity. Let's go across and listen into a slice of that conversation.
But let's get into the details about it. Sir, you highlighted Meta's 900 megawatt commitment. How much of this 2.5 gigawatt execution is underway right now, especially as a hyperscaler versus the traditional CNI customers?
Thank you so much. Yes, we had an excellent set of numbers. Our EBITDA grew by 74%. On a quarter-on-quarter comparison basis, and both our business segments, which is renewable energy power sales as well as RE services, both expanded their margins. And overall, yes, we do have, we added 500 megawatt of new capacity in this last quarter. We have also about 2,600 megawatt of what you could say pipeline contracted capacity, which is under execution. Overall, 42% of our total capacity, both previously executed as well as pipeline, is for data and AI clients, right? So 42% out of any number is data and AI clients. Rest 58% is traditional CNI clients.
Fair enough. And almost you have 2.5 gigawatt of contracted capacity under execution. Now, beyond this pipeline, what visibilities we can see for additions for FY28-29?
So we are guiding this year, we will add a minimum of 1,500 megawatts. So we have enough pipeline already contracted for the next 18 or so months of growth. But you know, in our business, every quarter we build as well as we sell. So in the last quarter, we built 500 megawatt. We also sold about 300, 350 megawatt of new capacity. So that will be an ongoing thing. For the last 2 years, our contracted under execution capacity has been around 2,500 megawatt or more.
Right. And sir, what is the current curtailment level coming in for Rajasthan and CTU projects versus June? And by when do you think they can normalize going ahead?
The benefit for us is that about 85% of our EBITDA is STU connected projects, which do not have curtailment. Yes, Rajasthan, we have one project which is about 13-14% of our annual EBITDA, which commissioned in March of this year. And there we are seeing curtailment of up to 70%. And we think this curtailment is likely to continue for the entire financial year.
Right. And how much of EBITDA was actually lost in this quarter due to this curtailment which was there? And what could be recovered once the transmission issues are solved? You have stated that this entire year there might be an overhang.
Yeah, that is true. But the benefit is the overhang only affects about 13% of our capacity. So, there's about a 7-8% lowering of the EBITDA. It could have been higher by 7-8% without the curtailment.
Right. So, but if this persists, the FY28 guidance still achievable, or you would like to change that?
Yeah, in fact, for FY28, we are giving a new guidance that we will achieve an EBITDA of at least 3,000 crores. So if you think about it, last year EBITDA was 1,300 crores, 1,280 was the precise number. And we are giving a new guidance that at next year, which is FY28, we will have a minimum EBITDA of about 3,000 crores. So it's a substantial step up.
Okay, so it's an upgrade. Realization was almost 4 rupees 6 paise per unit. Expectation was 4 rupees 13 paise. Are you seeing tariff pressure in the newer contracts given the increasing competition coming in the CNI renewables?
So the fact is that our realizations today are about 4 rupees and 2,500 capacity contracted under execution. Also, the realization is about 4 rupees. So we are not seeing any pressure on, if you will, the margins or the prices.
Fair enough. But you have already commissioned 500 megawatts in the first quarter. Given the strong start, why not upgrade the 1.5 gigawatt commission guidance as well?
We just want to wait a couple of quarters rather than upgrading a guidance because, projects are always very dynamic. So we'd rather always beat the guidance rather than have to answer with why you did not meet your guidance. So therefore, we are being a bit conservative.
Alright, and there you go. So that's the word coming in from CleanMax, being a bit conservative on their guidance, at least as of now, but they're very much on track to at least achieve the ones that they've outlined in terms of the targets. But speaking of targets, let's also move on and talk about M&M's tractor business that continues to see strong momentum also coming in. So July sales grow over 20%, supported by healthy rural demand and improving on-ground activity. You do have the management saying that the first 4 months are crucial for the industry as a whole, even as rainfall patterns and reservoir levels remain key factors to really watch out for. Let's also get you the full conversation we had earlier with Vijay Nakra, President Farm Equipment Sector M&M, talking on demand trends, monsoon impact, and of course the outlook for the rest of the year as well. Let's go across and listen in.
On the strong momentum we are seeing in the tractors, how are the trends looking like on the ground right now?
Thank you so much for having me on the show. The sentiment on the ground is very positive at the moment, and I think a couple of reasons for that. One, we've seen significant revival in the monsoon in the last couple of weeks. The long period average deficit has come down substantially to about 14%. The land under sowing for the Kharif season has significantly improved in the last 2 weeks. The sowing has been slightly delayed because the monsoons were delayed, but clearly we can see that now compared to last year, the deficit is about only 4%. And paddy, which is the highest sown crop in this season, is only 2% lower than last year in terms of acreage of land sown. And sugarcane, for example, is higher than last year. The support from the government, the timely support in terms of their spends in rural has gone up 16% over last year. So I think a lot of this has played together to create a positive sentiment on the ground. And the numbers that you see are an outcome of that positive sentiment and the requirement for tractors with higher mechanization across the country in the first season of this financial year.
Right. And sir, how is the impact of the lower monsoon? Which regions have been impacted?
I think there's been significant recovery, like I said, during the last couple of weeks, but there are still some pockets, largely the sort of central part of the country, some parts of Maharashtra, the Marathwada region, some portions of MP, some part of Telangana, the eastern central part of Karnataka. I think these are some states where there is some deficit, and then there is also deficit in some other states in the north, but many of those states aren't so much rain dependent. And hence, as a result of that, we've seen a lot of recovery, including states like Bihar and Jharkhand, where the monsoons reached a little late.
Right. And what's the growth guidance like for the whole year itself?
We stay with our figure, which we had put out earlier in the year, of mid-single digit growth, about 5% for the full year. And we've seen a very strong first quarter or first season up to July. However, quarter two, just for everyone's benefit, last year, the festive season, which is, just before the sowing of the Rabi season, is the largest time of the year for sales of tractor after the first season. This year, there is a shift in the festive season to the month of October, which means quarter three. So quarter two will not have any benefit of the festive season. Quarter three and quarter four, compared to last year, we will see a base effect coming in from last year because the GST reduced last year end of September, and quarter three and quarter four of last year had seen significant growth because of the reduction in GST and the benefit for the farmers. So that base effect will kick in quarter three and quarter four. So overall, we believe for the year, the industry will still remain at mid-single digit, about 5%.
Fair enough. And in which segments do you think, especially in the horsepower segment, the higher horsepower segment, do you think there is a momentum here? Because Q1, there was a little bit of impact on the labor shortages.
Yeah. The mechanization across the country has been increasing significantly. And yes, one of the reasons is labor shortage, but also the use of heavier implements in the farm has been going up. So as a result of that, and the third reason is that with the reduction in GST, the affordability for higher horsepower tractors has gone up. And tractor is an asset which is an asset class in rural India where people invest in. And as a result of all of this, the horsepower requirement has gone up. Affordability for higher horsepower has gone up. As a result of that, we now see that higher horsepower tractors are almost 68 to 70% of the industry. As far as we are concerned, at the start of the year, firstly, we've been leaders in the 40 to 50 horsepower segment. Number one. Number two, we've said that at the start of the year, we'll have 7 new launches during the year. 4 out of those 7 were in the 40 to 50 horsepower segment, and we've already launched those models at the start of the first season. So I think the trend of mechanization will continue to go up. The demand for higher horsepower tractors is here to stay. Having reached 70%, I don't think that that percentage would tilt significantly higher. It could be in the range of 70-75%, and we are well poised to play in that segment.
Right. Mechanization is a very important trend which we have picked up. But the last question, Vijay, I have for you is how should we look at the exports? That's also growing very strong. And how do you see that? Is certain regions doing much better than the other regions? I just wanted to get an entire picture of that.
Yeah, the global market is pretty volatile at the moment, and some of the large markets globally are seeing a lot of headwinds, and let me talk about a few of them where we are present and we play a significant role in those markets. So if I talk about North America, 18 quarters of degrowth in that market, actually 17 out of 18, only 1 quarter in 2024 had seen some growth, and that too, that was only 1.5%. So it's an extremely challenging market at the moment over there in terms of headwinds, but we've been in the top 3 players there, and we continue to be the number 3 player in North America in the less than 20% horsepower segment, which is the largest category in the market over there. You talk about Brazil, about 11% degrowth YTD, even in a market like Brazil. But there again, we've gained a significant market share of about 2.3%. Turkey, which is another very, very large market, has seen a 50% degrowth YTD, and we've gained 1.5% market share. So some of these large markets continue to see headwinds, and we believe some markets may have bottomed out and will start seeing some progress, but some markets may still have some time before they will turn around. And if I talk about the rest of the world, besides these three, from a demand and a market point of view, Africa continues to be very strong, and South Asia is strong, and we continue to do very well and grow in these markets.
All right, then there you go. So that's the word coming in terms of M&M Farm Equipment as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? 6 तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
a whole host of IPOs which are actually hitting the Lal Street lately, and one such that we're talking about is Leap India, a very interesting company where it is a company which is operating in a relatively under-penetrated, I would say, asset pooling kind of a business model as well. And to discuss about more, we have the MD and the CFO who's joining in our studios. We have Mr. Sunu Matthew, who's the founder and managing director, and Mr. Rajesham Ale, Chief Financial Officer at Leap India, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. First up, Mr. Matthew, I want to ask you, help us understand more in terms of Leap India. What does the company do? And what are you hitting the Lal Street with in terms of the IPO details?
Okay. So, Hiral, first of all, thank you for calling me and Rajesham to explain Leap India to you. Now, Leap is an acronym to Leading Enterprise in Asset Pooling. So, this asset is not cash, neither we are a logistics company, we don't do transportation, we don't do warehousing. Whenever anything reaches to you, any product, bulb, blade, biscuit, battery, it moves around 4 pillars of supply chain: supplier, manufacturer, 3PL and retailer. So there are various assets which are used in that, and the fulcrum is this kind of a pallet. So this is the miniature of a pallet. The size of the pallet is uniform, which is 1200 by 1000 mm, which is called a rectangular pallet. So we give it to different players at different point in time, and they pay us the daily rental. So we say, please focus on your core business rather than managing the operational things. That is our job. So since we are connecting all 4 pillars of supply chain, they can absolutely work on an OPEX model rather than a CAPEX model. It is not as simple that we have taken it and give it on a rental model. It is completely logistics engineering. Like we have 50 odd people who does the designing. Say suppose something has to be moved in automotive. Say suppose a crankshaft has to move from Chakan to Chennai. First we will take that, design it, then we will create a mold. From there we will create the insert, then the trials will happen, then the OEM has to say that it has reached without any kind of a damage. Then we will go and do the commercial negotiation with the C1 location. So the gestation period of breaking into a contract is like one month to 1.5 years.
Wow.
So, and then we take the IPR for all of these. For example, if we give this a pallet, say I give my pallets to somebody who is making a preform in Baroda. So we give it to them, they put the gaylord of preforms on that. They may take it to a cola factory in Gujarat. They will put hot air into that, they will make it a bottle, they will put their cola in that. They will take it to a third party logistics. From there it can go to any retail. It could be Reliance or it could be Amazon, Flipkarts of the world. The moment this pallet is free in any of the locations, we pick it back, it comes back. So if we are not there, everybody will buy their own pallet, they will break it and throw it. And if I'm drinking this water and the cycle time of making this water is say 5 days, we are wasting 5,000 rupees into the landfill.
So basically this is more of an annuity business that we can talk about, right?
Absolutely.
Okay, tell us about the funds that you're using in terms of that you're raising.
Okay.
What portion of it will be an OFS, how much will be a fresh issue, and how are you going to use it?
So the total size is 2,480. 4,480 is for the primary, which will come into the company, and we have currently 900 crores worth of debt. So we will be using 70% of this in order to repay the debt, and rest is an OFS for KKR. KKR has been a brilliant partner to us. Because of them, we have been able to acquire 2 companies. And once they do this deal, it's a very long fund, 12 to 14 year fund. So I have roped in them also as a promoter. So they will be further logged in with me for next 3 years.
Okay.
So it's a long fund. They will be very patient. They will be a patient investor for next 5 to 7 years. One more thing I would like to make a point here, that I am buying at the same value at which I have offered it to the public.
Well, this was Leap India talking about their upcoming IPO. But moving on, Saskintech is one such stock which is in focus on the back of Q1 FY27 numbers. Overall, if you see, company has seen 24% growth year on year when it comes to their revenue, and the margins are EBITDA margins stand at around 9% versus 5%. But to speak more about the quarter gone by, we are joined by Mr. Rajiv Modi, who is CMD and CEO at Saskintech. Well, Mr. Modi, welcome at NDTV Profit. Pleasure to have you. I wanted to understand, 24% year-on-year growth you have seen with 9% of EBITDA margin. Number one, what were the levers when it comes to, the Q1 that you have seen, and also how FY27 is looking like? What about margins? Where can EBITDA margins go? And overall, what is the revenue growth that you are expecting for 27?
First of all, thank you very much for having us on your show. It's a pleasure to be, and it's a pleasure to report to you our earnings for quarter one. We have seen, like you said, 24% growth year on year and about 1.6% growth quarter on quarter. We have improved our EBIT margins, EBITDA margins year on year. And as you know, we have two different streams that constitutes our revenues. One is the software services segment, as the other one is the product solutions. We would like you to look at our product solutions business more on a yearly basis rather than on a quarterly basis, because the nature of that business is such. While software services has shown 4.6% quarter-on-quarter growth as well as 24.3% year-on-year growth. We have improved our margins significantly from quarter four to quarter one, from 28.2 to 30.6. Some of the drivers are primarily the focus on now driving margins as we are scaling our business. So one, of course, is the utilization, which is about 85%. Second is the scale effect coming in, particularly in improving the margins between GM1 and GM2. So I think that is helping us in ensuring that we improve the margins. And third is, I think, the clear focus on our 60 by 4 by 3 strategy that we have created, where we are seeing growth across all segments of our business as we are progressing through our journey. So I think overall, a very satisfactory quarter. We have seen good orders booked during the quarter. I think $36 million worth of services, business orders, new orders we have booked, as well as I think there is another 10-11 million worth of our product solutions orders we have booked. So we are seeing good momentum in our journey, and like I said, focus is driving efficiencies, driving growth, and improving margins from here.
So margins, if you can look at, it's been at around the 7% band for the last couple of quarters. Is there further room for expansion? If yes, by how much percent, or from where can we see the exit margin rate for FY27?
So like I said, our business is comprising of two things. One is product solutions and software services. We do see continuous improvement in our software services margins from here on, as well as on a yearly basis, we'll see improvement also in our product solutions business. So overall, I think while we don't give guidance, we definitely are confident of delivering better margins overall from a business perspective of what we have delivered in Q1 for the full year basis.
I believe earlier you had mentioned that you are confident of sustaining double-digit revenue growth over the next couple of 2 to 3 years. So that guidance continues to remain?
I mean, while we don't formally guide, but right now there is good momentum, and we do see FY27 is a reasonably turning out a good year, and we expect our growth momentum to continue as we are progressing in our journey.
And sir, just wanted to check with you, which of the geographies is contributing the most to the growth, firstly?
I think we are seeing growth coming in from the US, from GCCs in India, from Europe. I think all these vectors are adding to our growth trajectory as we are going through the expansion during the year.
Right, and sir, you are also positioning yourself when it comes to semiconductor business as well. How much of current revenue comes from semiconductor related work, and what share do you want this business to contribute over the next maybe 3 years?
Yeah, I think we have seen good momentum in semiconductors business. We don't, I think, and in quarter one we have seen certain impacts in semiconductor business, primarily because there were certain delays associated with the shipments that we are required to do, which I think we're going to catch up in quarter two onwards. Overall, semiconductors is strategic to us, like we have said in our credo of chip to cognition. Both semiconductors, boards, the devices, all form part of our objective and growth vectors. It will be hard for me to kind of say, but we are quite bullish on our semiconductor offerings, and we do expect the momentum of growth to continue in semiconductors and definitely significant achievement, significant revenues we are ascribing to that in the next 3 to 4 years.
Right. I also want to understand about order books. What's the current order book looking like, and what are the execution timelines?
Basically, the thing that we report is primarily the orders that we booked in that particular quarter, and that's what we have disclosed to the market. We do not disclose what's the order backlog as yet. When we are ready for that, we will announce that to the market and make it visible to all the investors.
And when it comes to AI, if you could give us some understanding of how much part of your revenue is now directly linked to AI?
All the revenues that we derive largely is with the use of AI in all our customer engagement. So when we are referring to the growths, it is with the use of AI that we are referring the growths, and we do expect AI to be integral part of everything that we do. And we are proud to say the entire organization is AI enabled, and they use AI tools both in serving our customers as well as in internal efficiency, driving those effectively to ensure that we take advantage of AI.
You're saying that 100% of the revenue that you're generating right now is being done via directly or indirectly with some use of AI, or can you just tell me more about it?
About 77% of our revenues that we ascribe is with the use of AI tools, and we see more and more use of AI tools in all our engagements with our customers.
Sir, also the recently acquisition which you did of Borg, if I'm not wrong, if I'm box. Okay. I just wanted to understand, the integration, how it has been, the total synergies which has emerged when it comes to, customers or revenue or cross-selling opportunities. If you could also give us some highlights on that.
So I think we acquired a box in April of 2025, and we consolidated almost for the full year for FY 25-26. Of course, this year will be the technically consolidation of full year, but the last year was you can also say for all practical purposes. The integration is going extremely well. As a matter of fact, we have seen significant wins that we have co-created together, both on software services as well as on product design solutions. We'll see results around particularly product design solutions in the coming year as well as in the years ahead. Software services, we are immediately seeing the benefits. We have a hyperscaler as one of our large customers, and we are scaling effectively. With one of the large semiconductor players, we have seen significant impacts. With devices, the rugged computer market also, we are seeing good cross-selling happening. So overall, the integration has happened much more quicker than what I would have earlier anticipated, and the synergies are really getting delivered as we speak.
A very quick answer. Any more acquisition lined up in FY27?
Well, we are always in a lookout in terms of wherever we have an opportunity, particularly if there is something which kind of meets the which fills in the gaps. And where we are able to serve our customers, we are on the lookout. While we don't have anything in the horizon, we definitely would be looking out on possibilities of inorganic.
Right, sir. Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for Sask Tech. Well, that was the management quite optimistic. Moving on to M&M after July auto sales results. Very strong set of numbers coming in for not only for the first quarter, but also the July sales number remained quite strong for M&M that we are looking at. Let's listen into the management, what they have to say on the outlook going forward.
We're now in conversation with the management of Mahindra & Mahindra post-reporting yet another month of 20% growth in terms of sales. But to talk more about what he's currently seeing on the ground, what's happening with the EV landscape as well, now being joined by Mr. Nalinikant Golagunta. He's the CEO of the automotive division. Mr. Golagunta, thank you so much for joining me today. My first question, being that you've seen another 20% growth, you've guided for a mid to high teens for the whole year. So at a higher end in this particular month, let me just ask you first on your electric vehicle portfolio that has seen, as per Vahan data, also a very strong growth, over 125% growth. You've crossed 7,000 sales mark for the second consecutive month. Has that also led to a higher growth as you've seen because of the fuel price hikes amongst others, that a lot of people who were on the fence are now taking their decisions? Have you seen that trend in the last couple of months, and has that continued in July as well?
Yeah, firstly, thank you for having me on NDTV Profit. Like you said, EVs have been a clear highlight for us, not just in Q1, but in July as well. The way I would characterize it, I think the demand has been very strong. It's hard to disaggregate the major drivers into each one factor, but the reality is the whole segment is in category creation mode. We've talked about it earlier. Anytime a new product comes in, that adds volume, not just for the OEM, but for the industry as well. Very little cannibalization is happening. So, as you know, we had a major launch. Our 7-seater EV 9S came in Jan, and we started retailing just about early February or so. So with that, we increased our capacity as well. We went from 5 to 8,000. So we are now averaging consistently above the 7,000 mark. XEV 9S is now the largest selling EV brand across the country. We talked about it in our Q1 results as well. So very strong portfolio strength across all the three brands, but definitely 9S is the one which is giving a bulk of the growth at this point in time.
That's my second question, Mr. Golagunta, because you had the B6 as well as the 9E also come through earlier. And it's been in the fray for the last 17 to 18 odd months. So just in terms of when you mentioned that you have a capacity of 8,000 for the EV portfolio, is it fair to assume that roughly around 4 to 4,500 will be for the 9S, and that continues to be a model that is showing very strong order book, very strong traction at this point of time?
Yeah, so the clear advantage we have is all of these three products are based on the same in-globe platform with different top hats. So I have a fair bit of fungibility between the products, and depending on what the customer choices are, we can go one way or the other. But you're right, we can easily go up to 4,500 on 9S, or potentially even to 5,000 if needed as we get into festive as well. So that'll be a critical piece of the overall 7,000, 8,000 numbers we are hoping over the next quarter.
I do want to ask you about capacity though, because the ICE capacity will see another leg of growth by September of 2026, but the EVs will only get that increase going into, I think, the second half, and you want to reach from 8 to 12,000 by the end of the year. How should we look at that additional 4,000 that will come through? Is that going to be more back-ended post-October that we might see that come through, or is it largely going to be visible in Q4 of this year?
Yeah, so like I said, most of our capacity gets operationalized as we get new products in. And we have two major launches early in the calendar year, next calendar year. One of them is a new EV brand that we're bringing in as well. So it'll be tied to that. And this 8,000 will go to 12,000. That 4,000 extra capacity is tied to that launch that we're planning for.
Also, Mr. Golagunta, for this month, of course, you've shown a 20% growth. For the YTD, the first 4 months, you are at 16% growth, but you will start to see that base effect come through in the second half. So how should we look at the growth? Is there more pressure in that sense to achieve those targets, especially in the next 2 months? And where will that delta essentially come from? Will EV be the answer to get to that 20% growth for the year?
Yeah, so like you said, we are targeting mid to high teens growth overall for the SUV portfolio this year. There's a couple of things, tailwinds, I would say. One is we are at historically low dealer stocks across the portfolio. The demand continues to be robust and we head into festive season. So that's going to help as well. Second one is the capacity additions that we've been talking about. One tranche of that will come at the end of Q2, right in time for festive as well, right? So we are hoping both of this put together with the sentiment being quite strong across the industry should help us hit our numbers for the year overall.
And just one open-ended question, Mr. Gulagunta, largely on what you are currently seeing on the ground as well, because, you know, the momentum of EVs, and we've discussed that in quite a bit. You also, of course, you are slightly more capacity constraints at this point of time. So how are you prioritizing the key models that you have in the portfolio, as well as the orders that you're getting through at this point of time? While I'm sure the Thar as well as, you know, the Scorpio ends of the portfolio have the higher waiting periods, where have you seen that additional growth come from over the last few weeks?
Yeah, so 7XO continue to be strong, along with 9S. That was another product which you had launched as well. Very strong, robust demand we have had as well. So that should give us on the I side some demand boost on top of what already is strong demand across the Scorpio portfolio on the Thar, like you said, and even the Bolero portfolio post GST has done well for us. So, like I said, the demand is quite robust across the portfolio. EVs, no doubt, will give the additional growth you're talking about, but 7XO also is driving some additional growth for us.
And just one final question, because, you know, there was a lot of emphasis on the rural side of the portfolio too, even the quarterly earnings, even by Dr. Shah as well. Do you think it's now, you know, time to look at the Bolero as well as in a much more refreshed way of what we've seen? It's been a portfolio winner for you over the last 26 years. But when you look at that new model launch pipeline, you have almost 10 ICE vehicles which will come through over the next 4 years. 9 will be all new models. So how are you looking at the rural portfolio, as well as any comment you can get currently on the discounting for you?
Yeah, so as you know, we unveiled the new IQ platform last year in August, and that was to tap into not just the urban side of our business, but definitely on the rural side. It's a sub 4 and 4.3, squarely focused on that segment as well. And there are products in that portfolio which will address that market. But having said that, the current rural demand continues to be very robust. Post GST, Bolero has done extremely well. Scorpio Classic has done well. So we don't have any concerns on that front, on that overall. What was the second question?
Just on discounting, if because we've seen the demand continue even in the last 3 months or so. Generally, quarter one is a slower quarter, but this time around that's not the case. So have that reduced, or is it very model specific that they have increased?
Yeah, there's some tactical actions we have taken, but nothing of particular concern at this point in time. Like you said, dealer stock is at a very low level, and we are stocking up for festive as well. So we don't see major discounting happening going forward.
Got it. Well, Mr. Gulagunta, thanks so much for joining in, giving us time here on NDTV Profit. Wish you the best. Wish you the best for the 15th and the main event launches too. We'll of course see you there, but thank you so much for joining in.
Thank you.
Well, that was the management of M&M. Stay tuned. Lot more action on the other side.
Well, let's get in our fundamental guest, Narendra Solanki, Senior VP and Head Fundamental Research, Investment Services, Anandati. Narendra, you heard the management of M&M. They're quite confident on their growth path. They're expecting volumes to increase even going forward. How are you looking at this counter at the current valuations?
Yeah, good afternoon. See, right now for M&M, we have a hold rating on the stock. If you see, overall revenue growth was decent, but if you talk about margins and operating performance, then it was lower than our estimates, which was due to lower than estimated automotive margins. Also, we expect the volume growth to taper down going ahead in FY 27 and 28, and the reasons being the absence of market share gain. So broadly, the growth would be the market very close to the market, and we see a decline in tractor volumes also coming because the sluggishness in the industry which we see going ahead for 3 to 4 quarters, and also due to the GST there has been a visible shift towards the smaller cars in which the company has a very low portfolio in terms of models. So all these things combining, we see growth to moderate and thus have a hold rating on the stock right now.
Sports King is one counter that's been buzzing in trade. Let's get in Shivam to understand what could be the potential reason behind this 13% up move that we are seeing in this counter today.
Yes, Sports King is mainly involved in manufacturing the textile products such as cotton and yarns, and recently the company has released this Q1 FY27 results where they have posted a strong sales growth. In terms of margins also we have seen a substantial expansion. If we talk about the top line growth, that was mainly driven by the improved realizations as the business is mainly working towards implementing the orders. And in terms of financing and energy cost too, we have seen a downtick this time, which has led to better operational efficiency. Margins mainly expanded, which is due to the favorable conditions in the demand market and also the geopolitical tensions that management has stated that has continued to impact supply chains and logistics, but has managed to improve the challenge. In terms of revenue too, we have seen a growth of around 20% and that stands around 704 crores. Net profit has also gone up by 123%. And in terms of other metrics, the total production volumes of the company stands at 20,120 metric tons. That has seen a substantial improvement. Yarn sales volume has also gone up to 20,492 metric tons. In terms of management outlook, the management has said that the demand outlook for the company remains strong. In terms of the support consumption, the management has said that the upcoming festive season is expected to support the consumption and order flows. However, on the capex side, we have seen a company has commissioned solar power project which is expected to improve its operational efficiency, and going forward we can see a downtick in the energy cost which will further improve the operational efficiency. The temporary removal of the cotton cotton import duty that the government has taken, that has also improved the availability and greater supply of raw materials in the market too. So overall the picture looks positive for Sports King.
Multiple tailwinds that we are looking for this counter. Narendra, any view here?
We do not have any active coverage, but if you see overall the business of the company, it is transitioning from a pure play commodity yarn spinner into a comprehensive textile player, and especially their Odisha capex, once it becomes online in I think it's expected by Q3 FY27, then I think it would provide a significant leg up in the business of the company going ahead. And also the recent acquisitions offer a medium-term catalyst. So I think from that point onwards, the performance should also pick up, also from the operating margin perspective.
Well, thank you, Narendra. Thank you for joining us and giving us your views on the stocks that we discussed in trade today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hello and welcome back to NDTV Profit. You're watching Ask Profit. This is the afternoon edition. My name is Puneet Zaveri, and over the next 30 minutes, we'll try and get to all your stock related queries. So if you haven't already done so, do start sending in those queries on numbers that are flashing on the top of your screen. Also call us for your stock related queries. But as we generally do, and as we get to your stock related queries, a very quick check of how the markets are doing, because has been a day where we have been happy with the kind of gains that is seen on the screen, very close to that 24,600 mark, and it's a mark that's eluded us for a while now. So when you pull up the Nifty 50 and the heat map specifically for the same, there have been a few stocks like IT